All right. What's going on? What's going on, family? Good afternoon to you all. Shout out to the entrepreneurs out there, the go-getters, the investors, the traders, right? Today is Judgment Day. Figured I'd come on for a little time and speak to that a little bit. We kind of did a preliminary show maybe, 2 days ago? Yeah, I think 2 days ago. Days run up on you real fast. So, yeah, forgive me if I forgot. But anyway, we spoke about, what today may look like, so to speak, right? Given the fact that we were already planning for such a day, we were already aware and keen to the data in terms of what inflation would look like this month by tracking it organically through the commodities market. So it was no surprise, right? Some would say, well, they were still somewhat surprised. I say we were not. Why? Because we were planning for this. We were saving that bacon, right? As one would say, we were saving that bacon. And so today is no surprise. And it may seem as if the market was caught off guard, but I would say the market was well prepared for it as well. Yesterday's sell-off was just indicative of potentially what? There's a lot of rumors saying that the numbers were leaked yesterday. Algos caught wind of that. Hedge funds got caught wind of that. The banks did, and they started selling off somewhat ahead of the retail investors, right? This is the dirty game they play. Right? This is the dirty game they play, right? Because they know that the retail trader is always eager to somewhat adhere to what they feel like some major analyst or some, verbose talking point head is, constantly spewing all over these, different airwaves or getting people, I don't know, maybe, excited about just, remaining risk on in moments when there need to be more of a cautious approach to the marketplace. But nonetheless, again, as the saying goes, right? You are responsible for your own book. Trade your own book, right? You never invest more than you have willing to lose. And you understand the value of risk mitigation when necessary so you can better, again, manage your book and not get caught up in FOMO, right? Fear of missing out or foam or fear of losing money, whatever the case. But again, today is no surprise, right? We had a CPI data readout today that came in just as pretty much as we suspected. Basically bigger than what the previous one was, right? To what degree? That's debatable. Wall Street would have you to believe that this small tick up is just the typical ebb and flow of how inflationary data points will read, going throughout, the years, possibly into the back end of the year, and hopes that somehow, some way, Jerome Powell can orchestrate this so-called soft landing by being able to fight inflation and save equity markets in the same breath. Notice that his new mandate is to fight inflation that he calls, his board of governors calls, the administration calls, and they're trying to also provide a soft landing for the equity market. Key word, equity, right? Or equity markets, right? In tandem there. Notice that it has nothing to really do with really helping the Main Street, the Main Street side of things, right? The citizens, right? The taxpayers, right? I guess they feel like if they can, you know, ease some of the pain that you're feeling at the grocery store and the gas pump that they caused by way of their monetary policies that were very flagrant, then that's helping you. It's not giving you a leg up, it's just causing you to have less pain, inside of these these areas, right, of financial interest, right? That's plaguing everybody, right? Again, you're talking about energy, you're talking about food, right? We're gonna get into the numbers a little bit today as well, speak to that again. Just a good moment to kind of come on and add a little texture, right, to the day, right? It's a little texture, no more, no less, right? And we appreciate you guys stopping in today. If you're busy, I'm pretty sure you guys are in the mix of this, wild day today. The markets are down, S&P's down 2.5%, the Dow's down 2.3%, the NASDAQ is down 3.17% after having a rock out day before the market pulled back the other day, right? And, of course, we know the NASDAQ is obviously more weaker because of the 10-year yields ripping today. Why? Because the 10-year yield is an organic read that tells you whether or not future fund rate values of things are now beginning to be, signaling the need for rate hikes. The need for rate hikes. that of which the feds are very slow to move to really do something in curtailing or fighting inflation, right? This whole idea that they got all these tools, right? Remember, during the middle of COVID or the pandemic, we got all these tools to do what we can. We have indispensable tools that we can use to help fight against the pandemic. Now that they've caused inflation because they kept printing indiscriminately just when they should not have been printing all this excess money, increasing the M2 money supply, M1 money supply values, exacerbating the value of the the supply side by increasing too much extra fugazi demand, right? Now there's a big problem here, right? They can't rein it back in. You can't print oil, you can't print food, you can't print seeds to go in the ground to grow fast enough, right? So they up the crude out of powder because Wall Street biggest, in their mind, biggest leverage value that they've always held is that they feel like for every problem that we have to deal with, they could just apply money to it. But keep in mind that money is reciprocal. It's a revolving value where it has to come back to Wall Street. Not necessarily really going out doing community work, but it has to come back to Wall Street through some kind of form of an ROI. Therein lies the problem again. There's nobody really ethically doing anything to really to help the so-called Main Street American citizen, right? That's just my opinion, of course. That's that's the sword I die on today. If anybody want to challenge me on that, that's fine. But I see this thing from a multiplicity of ways, right? As an investor, and also, as a consumer or a person who wants to speak to the greater fold of people who are not necessarily invested in the markets on average, who may not follow these political data points and also financial data point values. And that's just the way they could be better well prepared to deal with it, right? So that's what I'm here for, right? And that's why many of you guys are here as well to speak to that, right? To help people make sense of all this, right? Right. And that's important, right? That's very important, right? You need places of interest, channels, or enclaves or whatever, where you can go and get an unfiltered narrative, and we'll back that by data more so than just opinion-based rhetoric only, right? And so that's what I'm excited about, that I can come before you guys, my peers, right? My financial brothers and sisters in arms when it comes to this, and we can politic together in a way where we can provide value to one another, tangible value, right? Through the value of helping us, construct the value of a nice, opportunity through that of a trade, or if it's just, being able to kind of delineate what's real from what's fake, from what we're hearing inside of Wall Street, right? So as you see on the screen, of course, that's the thumbnail for today, right? We have this thing where we're going to do current events based upon the most pressing data point, right? Today, of course, is CPI day. Today is Judgment Day, right? Today is Judgment Day, right? For all those people up and down, up and down the mainstream media, the offshoot, financial media publications and news media real sites, where they were just screaming, from high heaven back in April that we had hit the peak in inflation. We were getting ready to turn the curve on inflation. The tools that Jerome Powell had deployed thus far are starting to work, which he had really done anything at that point. Keep in mind, we were just sitting at 0.75 interest rates value after this latest 50 point value rate hike, so to speak, excuse me. But inflation, again, is sitting above 8%. So again, how you're fighting inflation, with only, 50 bip rate hikes, and you got a mountain ahead of you, because we know ultimately the goal of Wall Street is to do what? Play the role of talking that they're going to do something, but never do anything, right? They are the people who talk a good game, but never act on, proving that they got game, right? They are all talk, no action, right? As the saying goes in Washington, do as they say, not as they do. Why? Because everything that they do is antithetical to what they convince you that you should be doing. Right? That's the game that they play. Right? They want you to hurry up and suffer. They want you to hurry up and deal with high gas prices, high food prices, high energy prices, right? High lumber prices. The cost of buying a home now is just through the roof, because again, exacerbating the value of messing up the housing market by again overly saturating the value cheap money out there, causing, you know, somewhat of a firestorm of demand. Then obviously what that gets wiped away in one broad stroke when people realize the value of what inflation is causing them to spend more for less. You're literally paying high interest rates, high APR, and paying more for the materials itself that goes into building that house, which makes it even more of a extra tax. Right? You're getting taxed like 2 or 3 ways, right? Just to own a piece of the so-called American dream in terms of a piece of property. So again, these are times where you have to be very cautious, level-headed, briefed, and conscious about what's going on in around your what, right? Your nation. Why? Because again, there's not a lot of channels out there, and I'm saying, mainstream media, that really speak from an unbridled truth to give the American citizens what they really need. Again, we experienced that from a health perspective, even during the middle of the COVID pandemic, when they lied about that. Everything from that point on was just like all downhill. Like there's no credibility left, for the most part, for a lot of these institutions that's tied to system. Why? Because again, they are in the business of what? Data keeping, right? They're in the business of worrying about, ratings more so than, real lives, right? That's their whole modus operandi. They care about rating more than they care about people's real lives. And that's not even up for debate. But if you do want to debate, that's fine. Again, if you still sleep at the wheel, that's fine too. So that's why we peak, we're trying to pique people's interest in understanding how this system works so they can better equip themselves with better ways to find a way to, not necessarily be beholden to it 100%, right? You need to find ways to make your own money is my point, right? So that's it. So again, that's just, the nature of today's conversation, dealing with the CPI data and how these prices are not, again, they're not coming down, guys. Not in the short-term interim that they was convincing a lot of people that they are not, right? So again, you need to be very conscious of that, plan around that, and then hopefully somewhere, the smarter people in the back of the room will maybe step forward and do something to really fix this, because the people who are out in front of you every single day telling you that this stuff is transitory, was not transitory, but it's it'll waver over time, and they just keep switching up their talking points, right? You notice that, right? They pass and blame the other people who had nothing to really do with this, that really started this. Of course, it's Putin's fault, it's everybody else's fault except the people who are supposed to be, appointed to fix this, right? The managers, the C-suite of America and the administration, is their job to fix this, right? And they're doing everything except that, right? So again, this is going to be a weird wake-up call for a lot of people going into the midterm election cycle, where they're going to say, well, you know what? I don't want to have to, deal with this, right? And we don't know if the next one's, that we may select or do any better, but I can assure you what we have right now may not be sufficient. And of course, that's not me picking a side, because I don't play that role of any kind of political theater at this point, because I feel like, there's no tangible benefit for giving people, your so-called fealty or loyalty just to get nothing in return. To keep doing that over and over is like the definition of insanity at this point. Like, these people obviously have shown that they're not going to do your bidding, right? They're going to do that corporate interest bidding, or they're going to submit to the highest bidder, literally, right? And the highest bidder is definitely not you, apparently, right? Your tax dollars are not enough, apparently, right? So again, this is what you're left with. So yeah, as you see, yikes. The charlatans of Washington and Wall Street said inflation had peaked in April, right? They said it had peaked in April. Up and down those little channels, they were telling you it had peaked. We turning the curve. Goldman Sachs, BlackRock, Barclays, JP Morgan, right? I mean, the list is endless. Like all these, big mega, hedge fund banks. I mean, you name it. Morgan Stanley. I mean, Deutsche Bank. We turning the curve, guys. We turning the curve, right? Buy assets, buy tech, right? The bottom is in. They literally told you the bottom was in when S&P 500 was sitting at like 420 plus, right? The bottom is in, right? Lo and behold, we're not, right? As you see, I got alerts going off, so that lets you know I'm actively engaged in trading the market today, right? All right, get excited for that. But again, they convinced a lot of people that, the market was safe, right? The market was safe, right? We're safe, right? Everything, everything's good to go, right? And people began to, again, take them up on that. And they were just buying, again, indiscriminately, well into this 416 resistance level. We're going to look at some of those levels as well, again, today as well, and kind of dissect exactly what we saw in terms of why we put on risk protection at around that 416 level, right? We put on, ample put buys at around that 416 resistance level, that supply zone, if you will, right? And how today they've paid off, substantially. Like some guys were up like near 3,000+% today, right? 3,000+% today alone, right? Again, that's what it takes in essence to be, somewhat of a pioneer to go against the grain. There are times when we tell you, the trend is your friend, follow the money. Then there's times where you need to be very calculative and, strategic in understanding when you're seeing, exhaustion of buyers or, adherent risk at a point where there's not necessarily a follow through value of continuation of a move. What do you do at that point? Again, you either take profit or you hedge against that, right? You hedge against that. And so today was definitely a day to allow the fruit of that, strategic thinking to play itself out. And it did. It did beautifully for a lot of you guys. So shout out to you all today, guys. If you made, good money today by hedging, all this, I don't know, froth, if you will. And I'm saying froth because, again, we don't want to be in an economy like this right now. But the fact that they're not necessarily going to do the right thing to really get a handle on this stuff and they're just going to placate it, then no need for you to sit there and go along with, right, this Cinderella story, right? You got to do what you need to do to protect your book, right? Protect your money, right? Protect, your nest eggs or whatever. So, again, consequently, conversations like these are very important, right? So, that's the topic, right? Let's talk about them CPI data numbers, right? Everything, again, that we were talking about literally a couple of days ago, pretty much have came into fruition, right? Shout out over Chris in the building. Shout out to everybody else that may be listening in, tuning in from Facebook, Twitter, wherever. If you got a little time today, I know I'm at the time where everybody kind of focus in on the market. They're like, man, I'm over here trading today, bro. I ain't got time to take my hand off the wheels today, brother. Africa Poor. I'm just gonna have to catch up later. But ultimately, again, I just want to be in a position where I can come on and speak to a little bit of what I witnessed here today as well. I'm pretty sure you guys are already, well prepared for today, because again, like I was telling people earlier, we were already planning for this. We were planning for this day, right? As if all these binary events that come about, and they're fireborn into a whole lot of speculation based upon Wall Street not necessarily want to be completely honest, not only with investors but with the overall American people, because again, their agenda is always wherever they can siphon off some liquidity based upon, any kind of form of a stimulus, ideal of that, where money is being printed or given or derived, they're going to use that to rally off of, right? Again, they need constant, a constant steady value of money to come in to kind of keep them, I guess, if you will, working at an optimum level. But this is just not the marketplace to put on so much, I don't know, it's too much risk in times where, again, you're starting to see, contraction in GDP, contraction in terms of, discretionary spending, right? The housing market is starting to contract, right? There's so many different sectors that are telling you, screaming, they say a flag on the play, right? These are flag on the play type of moments, and they still want you to just act like these things are not literally what they're not they're not important or they're not serious, right? And that's just being very irresponsible if you ask me, right? So again, today's numbers were just, again, another extension of what the future in the short-term value will potentially continuously prove to be, how they got all of it wrong, right? They just made a really bad call on these numbers, right? These supposed to be professionals, mind you guys. These supposed to be the professionals. And again, I can say this unequivocally: we were able to forecast this stuff better than they did. And I'm not making that up, right? And I'm not being facetious. I'm not whatever. We were able to forecast this stuff better than they did, right? That says a lot to me. If you ask me, that says a lot. about, how they just sat there and just, again, just played everybody, right? They just played everybody, right? Or not us, but they played a lot of people, right? They played a lot of people. Right? A lot of people got all excited about, thinking that these people really had their back, that they were really doing something to fight the inflation, that it was just whatever. But again, when you look at the president's approval ratings, right, he has the lowest approval rating ever, right? I think in American history, like he can't get any lower than his approval ratings, right? He got like what 33% approval rating and falls in terms of how he's handling the economy, a 33%. And I'm pretty sure those 33 people, that 33%, right? That 33 people might just be 33 people, but the 33%, I can assure you, there's probably a lot of people who are just family members, right? His constituents, right? They, it's going to be his base, right? But the idea that you can get somebody else's who's, on the other spectrum of the political, political buzzer, if you will, to say that, okay, this person's doing a good job, it's not even personal. It's like they know you're not doing any kind of, anything close to a good job at this point, right? So it's just like, forget about it, right? Just forget about it, right? So that's pretty bad, guys. That's to me, I look at that and say, that's pretty bad, right? That's pretty bad. So that tells me again that they don't have their priorities, in play, right? They don't have their priorities particularly compartmentalized, right? And because of that, again, you guys, like all of us are suffering at the pump, the grocery stores, this, that, and the third, right? And it's not going to abate until, again, they get serious about fighting inflation. Again, you're talking about 8.6 inflation readout today, and we're sitting at a 0.75 interest rate level right now, right? Again, make that make sense, right? 0.75 interest rate, dang near from the zero, place where we come from, and we're talking about fighting inflation. Like seriously, I mean, if that ain't enough to let you know that these people are wasting your time by coming on trying to just, appease the stock market and, again, try to keep Wall Street happy as opposed to helping you, the taxpayer, that I don't know what to tell you at this point, right? You just kind of fighting the, your uphill battle. What's going on, family? Be humble in the building. Shout out to our family. Be humble in the house on the YouTube side of things. Peace, power, and profit to you today, right? Happy to have you guys in the house today, right? So again, this is the latest, consumer price index summary report that came out obviously today. All right, today is Judgment Day. Again, today was Judgment Day. And right off the top, when we looked at this report, 2 days ago, and we was talking about, what did, the April numbers look like? Of course, we were sitting at 8.3, somewhere around there. And, in terms of the actual, value of where inflation was on an overall, annual basis. And as you can see here, just the sequential value of what it come from, right? And like November, we had a 0.7 increase, right? This is adjusted value on a monthly basis, of course, leading to the annual. December and January were pretty much flat. February, we had 0.8, so we upticked about 0.2% value there, right? March came in, we had put out a whole, kicker of around about 0.4 percentage points. We lost, almost a whole percentage point in April, right? That's what the whole idea of where they use April and they kind of made that, they made a very like a declaration, right? Like a declaration of independence. Inflation has peaked. See, we told you guys, we told y'all it was going, it was transitory, right? Literally after a year and 4 months later, inflation is coming down, guys. I don't know what y'all talk about. Look at here. We dropped almost a whole percentage point in the month of April. And we clearly know why that happened, right? If some of you guys are not familiar why that happened, because they tried to pull a slick move, right? Number one, the Feds instantly start becoming more aggressive and hawkish in their narrative about what they were going to do to fight inflation without actually doing anything. So they literally talked the market into selling off by saying, we're going to threaten, we threaten to kind of raise interest rate, this and the third. Now they know they need to do it, but they were threatening the market. The market started pulling back, right? The yields start ripping on themselves, like the 10-year yield start going up on its own, void of the interest rates, organically to cause that. And so the market began to kind of pare back some of those high commodity prices. Again, lumber, kept falling. At that point, because you had gas pulling back slightly, right? Because at that point we had went up to like 130 something. We pulled all the way back to 100. We literally said, we're gonna start, probably hit somewhere of a supply point, or excuse me, a demand point around that $100 level again in the oil market, and then we may start stabilizing, going back up. Clear as day, oil went right back up. Right now, we sitting up here above about $1.20 a barrel, and it's starting to find support up at around that $1.20 area, $120 a barrel, excuse me. So we were like, okay, looking at the commodity markets on the, of course, if you will, if I go over here really quick, and let's go explore that for a hot second, then we'll come back to this, this CPI report, by the BLS, right? The CPI, right? Some people call it the CPI, right? Right? Let's go over here real quick and just look at the commodity market. This is how we was able to track that inflation was, number one, not transitory, and then number two, that it was not going to what, abate anytime soon, right? I mean, it's just there's no way, right? There's no way, right? So let's run over here real quick here while my alerts keep going off here, because I am actively trading the market, so you guys gonna have to bear with me here, right? So let's go over here to real-time commodity price real quick and see what I'm talking about here, right? So what I will do, I will lessen the sound of it in the background at least. Let me at least mute it. That way it's not just blaring in you guys' ears here, right? So look real quick here. Again, we talking about the performance, tab here on the monthly basis, right? Now we knew certain things were coming down. Again, we spoke about that deal. We knew lumber was coming down. Certain other things were coming down because again, they had kind of hit a point where the demand of those themselves, just people just stopped looking for those type of items, right? Because they couldn't get them. That in itself was a way that it kind of came down by way of everything being broken. The market was trying to fix itself just by saying, okay, well, we need some kind of form of supply before we can even take on this kind of scarcity demand, right? And some of that stuff started coming down. So let's look at the 1 month chart performance tab here on the real-time commodity futures price here. Let's just see again, just kind of put them in kind of order which ones came down the most last month, because they'll Wall Street all next week, I can almost guarantee all next week they're gonna look to these particular items and say, see, this is why we told you guys that inflation was peaking, and this is why we may be turning the curve. But again, look at the things that are coming down and see where they came from, how much they came from, and are they starting to now find new support before they start making another trend back up. Again, proving that it's not transitory, right? Because we know food and energy are the biggest things that it's kicking everyone in the teeth, right? Again, the idea that the lumber market is coming down is very, very. I mean, so good. It's not even rocket science. We know why the lumber prices are coming down. Why? Because the housing demand scenario is slowing up. Clearly, they're not building any new houses, right? They're working off the old inventory they have. So, there's no need, again, just be kind of, sitting in the lumber market, just buying lumber, unless they even building homes at this point, because that's something that cancels its own self out, right? That's a scenario of a commodity that cancels itself out based upon the demand of the certain, sector that uses it the most, right? Housing, right? Building, infrastructure value within that, right? So, no bueno there. Okay, soy, right? Well, look, fertilizers, right? There's a shortage on fertilizer. You can't grow soy without fertilizer, right? Potash, the nitrates that you need that come through the value of potash or fertilizers to grow soy. So again, cancels itself out in that regard, right? Cancels itself out, right? Palladium, the metals obviously had kind of boomed pretty well. We got gold up, got up this, around what near, in the mid 1900s at some point. It was doing quite well. Palladium is one of those metals that always is, done pretty well, outperform on a, relative basis when, the metals are doing well. Okay, pull back 4.7%, right? Again, still year to date is up 0.26%, right? So again, still up 43%. The only thing that really took a hard pull was again lumber thus far down 51%. Keep in mind, lumber was up at almost like $1,400 a lot, $1,400 a lot for lumber at its peak. So yeah, it needed to come down. So it got cut in half, right? Literally, it got cut, somewhat of a half, right? Right. So okay, no harm, no foul. But again, look at the 1 month, then look at the year to date. That's what's important. All right. To me, I think that's what we need to look at, because that's going to signal to you again, the extent of whether or not inflation is what? Cooling off or not. These are organic readouts, guys, organic, right? They can't cook the books with these, meaning they can't print lumber. You can't print soy. You can't print palladium, right? You can't print corn, wheat, aluminum. They can't print these things. So they stuck, right? They can only try to cook the books to change these numbers, but ultimately these are organic readouts based upon the global market. The global market determines these numbers, right? So that's why people come to charts like this to tell whether or not is inflation coming down or not. So when you're hearing them, oh, it's peaking, it's turning the curve, like stop. You like stop, just stop. Right? When they say in the South, boys, stop, right? Because you know that they're fibbing, right? So again, corn, look at that, corn down, pull back what? Basically 3.6% from last month, but still up 30% on the year. 30% increased value there in an inflationary environment. Wheat, well, we know wheat is definitely kicking everybody right now because, again, we talking about net exporters of wheat, Ukraine, Russia, some of the biggest producers of wheat on the planet. A lot of nations that depend on wheat up the creek without a paddle because they so value of, in terms of their food, being a net importer of those items is typically wheat because you got bread, pasta, everything else you can make with, with wheat. Places like Egypt, places, some of the Middle Eastern regions like that, they struggling right now, majorly. Right? Because that's a staple crop for them. They can't get it. Supplies messed up. They up the creek out of paddle. But it's, look, pull back 3%, still up 40% on the year day in there. Of course, we know the whole story with aluminum, right? Aluminum just went on a wild swing, just went to ripping, right? But it's also demand, a demand or use case now because what? Infrastructure is not being built. The filaments that's coming from the value of being able to need or use aluminum is just not there. So it's canceling itself out because of production is still slow. The machines and factories are still, sputtering to kind of get back to some kind of form of normalcy, right? So some of these things will cancel themselves out. So it's not even like it's, that it's just that, the economy is improving so much or production is improving so much and the output is so great that it's killing demand on that level. That's not the case because we know production is not at the level. China just came out of lockdown literally a week ago. Think about that, right? Literally a week ago. So that's why aluminum is a problem because they are they are the biggest managers of what? Aluminum, right? Iron ore, bauxite, stuff like that. China controls a lot of that that mineral-based market, right? So clearly we know why that's NIMA looks like that, right? Let's move on, right? You got rough rice, right? Rough rice, right? Rough rice futures. Again, pull back 2.7% on the month, still up what? 11% on the what? On the year. These are becoming buy the dip moments in some of these same assets. Because we can look at the chart and figure out whether or not that, does that look like a buy the dip moment? So if they buying a dip, that means how's inflation coming down? They need these stocks to what? Not only come down, but keep going down. Think about it. They need these commodities, right? These minerals, these elements, this, that, the third, rice, lumber. They need these things to come down and continuously go down. But they're not. They're being bought. Definitely people have been buying wheat. They definitely bought the dip in wheat. And they constantly buying the dip in wheat. Look right here. On the wheat back up, what, 3%? Corn back up, what, 6%? Right? Could make this stuff up. Right? Lumber is the only one that's still faltering, but it's finding support around what, about 5, I think we're about what, 530, 540? So again, this one here definitely is a problem because the housing market is what showing you that, that's why it's canceling lumber out. So again, no harm, no foul there. Nickel, same way. Nickel pulled back 1.79%, still up 31% on the year. Again, down the list, platinum, you see what's going on there. Majority of these stocks are still, or assets are still up on the year. Granted. And the ones that were, underperforming last month are actually starting to perform what? This month. Think about that. The things that were underperforming last readout are starting to now perform this month. Hence, what inflation that y'all see that is starting to what? Ease or abate. Right? Couldn't make this stuff up. Right? All the transitory people in the building stand up so we can what? Take you out back and put a bullet in you, right? Because y'all were telling people that it was transitory. It was peaking. It was not. It was not, right? But be like, give me a knife, right? Because you're gonna need one, right? Because you were telling everybody that it was this and that, and they bought under those under that guise that things were peaking. They were not peaking. Zinc, look at that zinc. I mean, clearly, just strength. Gold is completely, showing that it's resilient. This is supposed to be an inflationary hedge, even though it's been sputtering because the dollar been ripping. But we know why the dollar ripping. The reason why the dollar is still strong right now, in a time where you would think the dollar be coming back, is because, like everybody knows, like everybody else, nation is struggling. They're not producing. So that means their currency is not strong. This is not rocket science. Of course, the dollar gonna look stronger against everybody else's currency if their currency is weak. Not rocket science, guys. Not rocket science. It is not rocket science. Copper, right? Copper was sputtering a little bit. And we know copper is one of the biggest demand value metals living on the planet. Like copper goes into everything dang near. It's rounding the curve a little bit here, right? And it's just because this really is demand level for copper. They need people to mine it so they can fashion it and send it out. So it's really based upon the production value, the mining and producing it. But it's needed more than anything, especially if you're going to build anything dang near. You need copper. It's one of those ubiquitous metals, right? That's why a lot of people got their eyes on copper too. In the commodity markets and the equity market, they say, man, copper get the ripping. We're in trouble, right? So keep your eye on that. U.S. cotton, same thing. Look here, still up, right? For the month, 1.4%. Look, added that to the 28% is already up, year to date. So you starting to see again what we see, what we've been seeing all along, what we've been trying to advise people on. Not that we, accredited investors or this, that, third. Again, everything we offer here is just an opinion, right? This is not financial advice, but it's a way to learn how to hunt and fish properly, how to research properly, how to be able to interpret the data properly, right? How to delineate truth from fiction properly, because these are primary sources, not, Jimmy Chill, or as they call him, right? Jim Cramer telling you, no, it's this, and we peaked, and the bottom is in, and I think equities are great to buy. All this dump, like, no, stop, right? Right. We're going to deal with the data and the data only again. So convince me how we were able to, stay ahead of all this inflationary data. Weekend investors, if you will, if you want to call us that, weekend warrior type investors, and the smart people who got the PhDs and the this, that, and the third, the talking heads all over the TV, they can't get this right. They couldn't come over here and see the same things that we were seeing that are organic, numbers, and figure out whether or not we were peaking in with inflation or not, because they literally told you guys that inflation had peaked in April. And now today they're eating crow. They choking on crow in Wall Street. Choking on it. And what's also crazy is because not only are they choking on crow, but they're in their feelings. Why? Because this eliminates the lie that they thought the Feds had a moment to potentially think about pausing rate hikes in the month of September. Hence, they rallied on that They rallied on that lie last month when they thought that the numbers were peaking in terms of inflation from April. So yeah, this is gonna cause the Fed to have a pause and wait to see what the data looks like in the month of September. So Wall Street start rallying on that. We literally bounced from 380 and ran all the way up, hit 420, pulled back, started a new resistance point around 416, and hovered it under 416, and let's say 410 for a good little while before we broke underneath that 410. And that was all based upon a fugazi rally. Again, just a typical bear market rally, right? Inside of bear markets, you have, vicious rallies that happen. A lot of it's spoofed by or sparked by bad data, manipulation, if you will. Just call it what it is. That's manipulation. Because there's no way they could have made that kind of assertion if they would have came over here and looked at these same commodity prices that we're checking. When we're checking the future fund Fed rate, we're checking the value of the consumer reports that tell you that the consumers are starting to close their wallets more. They're not doing a whole lot of indiscriminate spending. They're not spending on discretionary items. That's why they're closing down. Stocks like Shopify crash, Etsy crash, eBay crash, Amazon crash, right? All those discretionary items crash, Target crash, Walmart crash, right? Again, it was more so on the discretionary side that caused a lot of those stocks to come down, even though they carry staple items too, food, toothpaste, soap, butter. But a lot of the stuff that they had also inside the inventory, those things were not selling. People were not going to Walmart to buy a flat screen TV when they were struggling think about how they're going to feed their family and put gas in their car. See how that worked? Same with Target, right? So it was no secret why those stocks crashed or pulled back, if you will. Again, you just got to know how to delineate where lies to what, or snuff out the real problems so you can make better investment, decisions given the extent of what the economy looks like, from a consumer standpoint and the investor standpoint. Live cattle, up what, dang near 2%, right? Again, see how these right here were down on the month? Now these assets here are starting to catch a bid. Silver, copper, right? US AUG offers USD, right? The value of that gold, right? I mean, you see it here. Again, could make this up. Call US coffee. Look at lean hogs. Lean hogs. They call lean hogs the new big tech, right? I get a kick out of that. Like, lean hogs is the new big tech sector, right? You need to be buying lean hogs as opposed to Apple and Netflix and Google, right? Lean hogs up almost 7%. Almost 7% on the month. That means you're paying higher prices, even more higher prices for what, bacon, all that stuff like that. Your pork price products, you paying an additional kick on that. Also, I saw some news today that one of the biggest pork manufacturers, or butchers, if you will, or distributors, is starting to close or shut down some of their workforce. They're starting to lay people off, whatever. Smithfield, right in North Carolina, biggest pork producer on the planet, meaning butcher, whatever you want to call them, distributor of it. They starting to lay people off. So that means scarcity for what? For pork, bacon, all that stuff. Now, guess what? I need I say anymore, right? Keep your eyes on lean hogs. But look at it, 32% on the year, 7% on the month, still ripping. Right? None of these things even slowed down. U.S. soy, right? U.S. soy, right? You got soy meal, right? And you also got the regular soybean futures. They never stop. They just constantly ripping. Right? Say ripping since been ripping, right? Right? Orange juice. We know the old scarcity scenario. They had a bad crop in Florida, messed that whole thing up. Even the Valencia farmers out there in California, whatever, everybody dealing with the same value of scarcity of fertilizers, this, that, and the third. Scarcity there. Orange prices are up through the roof. Tangerine, citrus, forget about it. Not slowing down either. Put up an additional 9 points or 9 percentage value points 1 month alone, last month alone. Now up 26% so far year to date. Half of that literally came from 1 month alone. When you start looking at that kind of compare and contrast, no secret what's going on here. No secret. Right? So I would tell you either want to be lied to or you want to be lied to, right? You got to learn how to hunt, guys. You got to learn how to fish. So again, up and down the board. Again, feeder cattle, same way. 10% last month alone. 10% last month alone, feeder cattle. Heating oil, right? And they talking about shipping nat gas and all that stuff like that to Europe because, they mad at Putin and, Europe had, they kind of, boxed themselves into a quagmire, and they know they need, that, production of oil or heating oil and nat gas to come out of Russia. And they feel us behind this whole Ukraine thing. Again, wherever you stand on that, whatever. But as a place of business, we speak business over here. It's not personal, right? We understand the value of what's going on there, but that's business. Again, they bet you got to lie in it unless you come up with other ways to show that you can produce that stuff your own, which they can't. That's how come they need Russia, because if we struggling paying for gas and oil and everything at this point, we ain't pumping anything additional. They won't open up any of these contracts so we can pump additional barrels of oil for our own well-being. How are we going to supply Europe with what they need? I'm just asking for a friend. How are we going to supply or meet the need of Europe and our need at the same time? I'm asking. Illogical. So everything they did in terms of sanctions against Russia came back a boomerang dagger at them. A boomerang dagger. They hurting their own economy by being somewhat, grandstanding and trying to look like they taking the moral and the ethical high road. And the citizenry is suffering. Oats down 7% on the month, still up 65% on the year. Couldn't make this stuff up. Again, heat and oil is still up over 100% on the year. That's crazy, right? Couldn't make this stuff up. And then we know the ones who's really kicking everybody in the teeth. The biggest cost, ancillary cost, ubiquitous cost on the planet is what? Fossil fuels, oil. Show me how any of these prices right here are going down. Any of these here. Brent or crude or natural gas, London, right? This whole London oil stuff, right? Gasoline, all this stuff is up. And it ain't slowing down. Look here, 50%, it's 13% on the month. 14, 15, all almost what? Almost in complete unison. Show me where inflation is abating, guys. And I'll show you a clown who's lying to you, telling you that it is. Only for the sake that they're trying to what? Spark a rally so people could buy their bags in the stock market. True story, right? As they say, couldn't make this stuff up, right? Not making this stuff up. It's that bad, right? But again, there's means where you can survive this, of course. Again, if you are an investor or entrepreneur or person of that interest, it's obvious that you will have to move into spaces that are more equipped to deal with their use case or demand level. There lies where you will find your way to make your little income. If you have some kind of means of skill or production that you can apply for things that are in demand, that are again marginally priced well in this moment, capitalize on it. If not, utilize what we do, these financial instruments and stocks, and still do pretty well in hedging against all this risk. Right? Hedging against tech stocks right now are that's not even again up for debate at this point. Come right on over to the commodity markets or the energy sector alone. Again, the XLE in itself has just been ripping, which really makes up again the majority of these top or bottom tier or fossil fuel stocks down here. Most people just buying the XLE, just been riding the XLE over the past 4 or 5 months, and we'll take a look at the XLE to show you exactly what I'm talking about. And it's not even funny at this point, right? It's not even funny again, but that's why again, conversations like these are very, very vital, because they're going to convince you that it's not what your eyes are seeing. Yeah, they'll tell you to your face, your eyes are lying, right? Your eyes are lying. That's not what you see. You're reading it wrong. Or they'll say something like that. Are you reading the data wrong? You got it all wrong. Whatever, right? Like stop. Right? What's going on over Brandon? What's going on over Yoda in the building? Family Yoda in the house, right? Shout out to you guys today. Right? Shout out to the family today. Right. So again, we have to realize, the hustle, right? We got to realize that, it was all a dream. We used to read Word Up magazine, right? They hit you with one of them lines, right? They hit you with one of them lines, but we know better, guys. We know better. So again, if you want to find out what inflation looks like, guys, keep the commodity tab on fresh refresh, right? On fresh refresh, right? Stay out of these echo chambers all on CNBC, Bloomberg. That's going to, obviously tell a different story, because their goal is to fake it till they make it. Wall Street has always been known for faking it till it can make it, because we know, and y'all know as well as I know, once money goes down range, or they print extra money, or they pump a certain stock for whatever reason, that money can't be recanted back on bad data. It can't be recanted back on fake and false data. That stock been bought and sold so many times to flip, they can't know anywhere they can go track all that money and get it back. That's how Wall Street has always been orchestrated and worked, and how it's proven to be a scenario where if you don't understand the tricks of the trade, it can get downright messy, right? It can get downright messy, right? Especially from an investor standpoint, you got to know how to hunt, guys. You got to know how to play ball respective to what the rules of engagement are, right? Because again, when we think about building and creating a lane for or finding a space, or if you will, a safe space in such a lane like this here, well, yeah, it's important to realize again just the extent of what you're up against, and the majority of things that you're going to deal with on average, again, are people, in this case, in terms of the institutional side of things. These people have a mandate, right? They have to be risk on, even when in moments when they need to be clearly they need to be risk off. They still need to be out there trying to buy something, because they got clients again that they are constantly working for, and trying to prove that hey, there's still pockets of growth out there. But a lot of the stocks that they want to buy, they can't buy now, because clearly the PEs are still overly expensive. They're just it's just not enough growth left out in those spaces, right? but they're just trying to force it. They're forcing these buys, right? That's why you've been hearing people like Jim Cramer and the likes of Tom Lee and like the other guy, like, yeah, tech is still attractive right now. Tech has came down so much now, it's very attractive now. Again, Amazon just did a stock split in the middle of an inflationary readout scenario that really stemmed from the value that they even had slow growth. They were not what they were before the split, and they are not worth what they are today, given the fact that inflation is still showing you that it's very still problematic. So what they did what 10-for-1 split, whatever it was, 20-for-1 split, and they cut the stock down from 2,100, whatever where it was, to like $120 a share, something like that. Still expensive, given the nature of what the business that Amazon has to be able to produce, meaning the amount of sales that they have to kind of deliver on to kind of back their performance value or their revenue stream value. If it's not there because people are not buying, then how can you justify such a valuation? Is my point. How can you justify that valuation? And if it's not proven to be something that's starting to turn a curve, if you will, right? Like all of a sudden, you guys got more money in your bank account out of thin air, right? All of a sudden you got to raise overnight, so yeah, you can now afford to buy all these discretionary items you've been wanting to buy, via Amazon, right? Not just toilet paper and boxes of pasta, right? But now you can go buy your favorite electric shaver and raise all this. You can go buy all the discretionary stuff. Like, prove to me how that's the case, right? Prove to me how that is the case, right? Because I can assure you, for the most part, people who they have a little extra, they just not going out their way to buy all these extra items like that. That's just my opinion, of course. I could be wrong. I could be wrong, right? I could be wrong, right? But I know, for the most part, smart people who, again, look at different data points to assess, the kind of marketplace that they're going into every day, who don't necessarily just buy anything that someone's trying to sell to them. They're going to be looking at these things with a little bit more caution. They're like, whoa, bro, whoa, bro. Why would I want to pay that extra, margin at this point if I don't have to? Because I know this is also a money grab out of the business owners themselves too. It's not their fault. They got pricing power. They got a product item that's has a use case. It's a need for it. That's what makes the government have such a problem, because they can't fight inflation without having also corporations saying, okay, we'll bite the bullet and we'll lower our prices too to help the greater good of American people. What's the whole point of being in business for then? Right? You're in business to make money, right? It's the government job to kind of fill in the gaps of that scenario that will help everybody, where everybody can equally and from an equity perspective, everybody can win. And they just dropping the ball in that form. They're just dropping the ball in that form. Again, till we see something different, I'm like, look, bro, don't let these people gas you up, right, to take you nowhere, right? Do not let them gas you up to take you nowhere, because, again, this is the extent of how they're doing business, right? This is the extent of how they're doing business. Again, we almost got a minute here before power hour kicks off here, so the market is getting ready to turn that last hour, in the market, if you will. And we got a little bounce off the 390. Support has been building all day today. They found the way to keep the market from plummeting underneath 390. I say going into next week, we got the FOMC meeting, which is going to be very now revealing in terms of how they can't use the lie of we're not going to do any more rate hikes going into September. That stuff out the window now. We pretty much dispelled that lie today, right? Organic data points dispelled that lie today. Not just us, but organic readouts, really dispelled that lie today. Wall Street cannot hide behind that lie again today. That's my point. They can't hide behind that lie, right? So 9 times out of 10, the Federal Reserve, when they meet next week, they got to speak, quote unquote, I got to say it this way, they got to speak truth to power in a way where they're like, okay, look, yeah, we were thinking that, inflation was coming down or peaking, and turns out that it's not. Yeah, we know we had told y'all we had extra 50 bips, rate hikes coming for the next 2-3 months. Now we may need to start thinking about, well into deep into what, Q3, possibly even Q4, right? Because at this point, as we all know, when the inflation genie's out the bottle, it does not go back in. You're not going to stop people from buying the commodity markets that you see on the screen right now just because, everybody's suffering at the pump, because they see this as a what? The same value of scarcity that drives people to buy certain things, and herd value. It's the same thing happened with the algos. The same thing happened to institutions, because that's what people do when they can't go to their favorite stock. They hedge and go to what? Something else. And it just happened to be that these lanes here are the ones that's exacerbating the inflation, because commodities are the ultimate hedge right now during inflation. They are the things that people need. And there's a scarcity of it because they're not planting seed. They're not mining the iron ore out of the ground. They're not, digging up, all these so-called minerals and so forth on, because again, a lot of other issues, supply chain. People need components to make certain things like semiconductors. You need what? Neon, gas and stuff like that to make semiconductors, right? Okay, yeah. If Ukraine in the middle of a war and some of the biggest, deposits of neon that goes into making semiconductors is what? Disrupted because of that scenario. How you gonna get semiconductors unless you find a way to mine it somewhere else? See how that works? Not rocket science, right? And joke about it. Not rocket science, right? Right? Yeah, 100% right. Over be humble. They piss on us and on our feet and calling it rain, right? Exactly. Knowledge is power indeed. Facts, right? Inflation is exploded. 100% right. Over Chris, right? Again, this is the extent of why you need to have, you need to be with, you got to look. You need to get to a circle. You need to get with some people who, that can give you some good, some good intel, some good data. Keep it to you, keep it straight and narrow, right? Give it to you, from a place where you can say, okay, well, I see what's going on here. I can operate better based upon, this, right? Or I can operate better based on that, right? Because if not, man, people are going to sell you up the creek without a paddle. All right. They're going to sell you up the creek without a paddle, right? And that's important because, again, knowing how the markets work, from my perspective, right, I think that's our job, right? It's our job to, again, be able to help one another, because it's not coming from the institution. It's not coming from the government arm, right? They're spending too much time trying to tell you about, why you need to be wearing the mask to go up and up and, Wendy's somewhere, Taco Bell, as opposed like, well, hey, here's what you need to do to help really, fix your or at least put a band-aid on your economic situation until we can get all this other stuff in place. They need to be 100% propaganda reels running 24/7 in terms of helping people figure out how to protect their resources and assets from an financial literacy education standpoint, 24 hours a day on PBS, CBS, NBC. Not gonna happen though. They'll never tell you how to hunt, because they need you to default. They need you to be a part of the defaulting crew, right? They need to wipe you out in order for the wealthy can continue to eat off your debt. It's not even up for debate at this point. It's so evident that there's never been a what they call a flight to safety or a qualitative QC arm of the system that says, let's really for once protect the worker, the average American mom and pop person. Stop. Because on average, the actual mom and pop person is not hanging out down here at 1600 Pennsylvania Avenue, lobbying, saying, hey, look out for my interest. They say, hey, I already pay taxes, right? I'm already consuming in the nation. I'm already feeding into it. By way of that, you already know I contribute to it. Go do the bidding of my vote value and what you already get for my tax dollar. Washington look at that and say, yeah, but it's not enough. You got a little extra? Can you kick me a little extra? Can you help, send my son, overseas so he can get him a, a shoe-in little job doing nothing so he can make, all this money doing nothing, not qualified. like joke, like really, right? So again, it's important to realize exactly how this stuff works. So again, when you see the data, you will not be confused about it. You won't sit here and have to, again, make lifestyle decisions without at least being well informed. So again, let's come straight to the numbers real quick. These are the main numbers. Now, what I should have done is took a screenshot yesterday, what it was, in May, because I can go back on and pull up May too. and pull them side by side, but it'd have been great if I had like, a side by side, test here. But look here. Of course, we put out a whole percentage point for the month of May. See right here? We went up a whole new extra percentage point. All right. That says a lot about what so-called there's your what. There goes your ideal of what inflation's coming down. Say, look at food. We put up what 1.2. Right? We had 0.9. We put up what a difference on in this case it would be around basically about what 0.3 value in what in food costs, and that's exacerbated by the wheat and everything else that we were just talking about. So guess what? And this is going to get worse because we're going into the summer months. Right? The value that you're gonna need extra resources even to help, the farmers in that regard, and they already struggling. So food ain't finna come down. I'm just saying. I'm just asking for a friend. Food price finna come down. I'm just asking for a friend. I hope so. I would love so, but nah. At home food costs, grocery store price stuff like that. Look at, food away from home. Excuse me, restaurant like that. Look at 0.4% increase. Bet you paying an additional tax just for being able to eat out. I mean, it's crazy, right? Or food at home is 1.4, but food away from home is 0.1%. Excuse me, I had the wrong line there. Right, we're looking at this line right here. Right, that's like restaurant stuff like that. Energy costs. We had a negative 2.7 coming out of what March into April, and then what we took all that back and then some. That's almost an increase around interest value around about what dang near what a 6 kicker from negative 2.7 all the way back up to what. They know what a 4 handle on what on energy. There goes your gas prices. There goes your energy prices. Again, some of the biggest costs out there are energy and food, and they're telling you that they can't even put those data points actually in there into the data to tell you what the true actual read out of what inflation really looks like. These are fugazi numbers that y'all see. When y'all see this 8.6 stuff, that's a lie. The real numbers are around by 18%. The real numbers around 17, 18% inflation. They stripped out food and energy because they say it's too volatile. That's 100% cooking of the books right in your face, peeing on your feet and telling you that it's rain. As if you get to magically just say, yeah, my gas price don't matter. My food bill don't matter. My grocery bill don't matter because the Fed said it don't matter. So guess what? That's on me. I got to eat that. And I just need to worry about all the other stuff, used car prices, apparel prices, that kind of stuff. Like, are you kidding me? Like, brother, are you kidding me? Right? You can't be serious. Right? You can't be serious. Right? So, look, at some point, again, you got to know what you're dealing with so you can function better. So down the list, as you see, food energy increases through the roof, right? Energy services uptick there as well, right? Yeah, fuel and oil just again big incline. Look at that big climb on fuel oil, right? We had a 22 readout in March, which we knew at that point because that's when oil surged up, $1.30. Excuse me, I see it saying $1.30, $134 a barrel, somewhere around there. We pulled back. Of course, we did. It's like buying a dip. We came down and have a soft reading in the month of April, 2.7, and then for the month of May, right back up 16.9%, 17% basically. On the year, again, we talking about 106 basis points. Crushing it. Right? Meaning crushing us at the gas pump. Electricity bills, still ripping, going higher. Utility bills, same value. Pipe gas, stuff like that. Look at that increase. 3.1 all the way up to 8. That's a 5% increase or 5 bill increase. Crazy numbers. So I'm just saying, where is it coming down at, guys? Where's inflation coming down at? I'm asking for a friend. Right? The one thing they got excited about was used car prices. See, we told y'all, look, used car prices going down. How many people trying to buy a used car right now? Seriously. How many people trying to buy a used car right now when they trying to feed themselves and keep the one car they got probably up running? How many people going out the way to buy used cars right now? Wall Street would say, see, it's coming down because people ain't buying a whole lot of used cars right now. These people then lost their mind. They so greedy and sensitive to everybody, that they'll find anything to try to make a base case on that has no consequential value of what merit to be what even cheerleading for. Straight savages. They literally are straight savages. Disconnected from reality, the whole nine. It reminds me of what, the Janet Yellen thing, right? Remember, she spent almost longer than what she actually spent longer than Jerome Powell pushing that same lie that what inflation was transitory. And this is supposed to be the Secretary of Treasury. And she kept that same lie going longer than she could. And then literally a week ago came out before everybody, Congress and everybody had to admit that she got it wrong, which we knew you had it wrong from day one. You just sat there with lying because you wanted to keep Wall Street happy enough to keep buying up these assets. These people are look in your face and lie to you and then act like, they just had a bad day at the office kind of reality. No one gets fired. Mind you, no one gets fired. You make that kind of bad decision on the job, you getting fired. You cost that company time and money for that error. You fired. You out of there. Something like this right here show up. There is no recession, right? Right? This meme here crack me. You got Cardi B helping Janet Yellen, like, because Cardi B came out with that infamous tweet. When y'all think they're gonna announce that we're going into recession, right? So Cardi B like, look, Janet Yellen, look, grandma. Yeah, about that. Let's get you to bed because apparently apparently you sleep at the wheel, grandma. Let's get you to bed. Come on, what ain't no recession. These people are straight. Call them what they really are. They charlatans. They just straight charlatans. They supposed to be the MITs, the Harvards, the Yales, the Princetons, right? The Berkeleys, the Wharton School of Economics. They supposed to be these kind of graduates, and they sitting at the highest positions that a person can hold, literally on the planet for the financial value that our nation holds. Again, in regards to everybody else, and they making all these bad decisions. Outright lying, basically, it's outright lying. Right? Couldn't make this stuff up. Again, Jim Cramer. We're the strongest economy perhaps I've ever seen. About a month ago when the market was bouncing off that fugazi lied about, the Fed may pause in September, all of a sudden, now it's risk on again. Bye. And yeah, okay. Today, whole new different picture. Whole new different energy now. Straight charlatans. I'm like, what? How, Sway? How, Sway? Strongest economy ever. How, Sway? How? Right? Couldn't make this stuff up. So, hey, it pays, to be a part of what they call the cool kids. The cool kids are going to be the kids to tell the truth. If people are afraid to hear the truth, then I can almost assure you that, you need not spend another second trying to prove this, that they they run in the era, and waste your time, sweat equity, all that, and the people who got earplugs in, hands over the ears, earmuffs on top of that, who are just destined to kind of just play the role of just being, I don't know, class clown, maybe, if you will. I don't know. But at this point, this stuff is just almost obvious that, they're just being railroaded. And they must like it. They must like it because they keep going back to the same media outlets, apparatuses of people, these people who giving them bad data, who sitting there, stroking their egos and not telling them the truth. Again, a lot of these politicians do that a lot. And they just sitting there being grind up in the meat grinder. They're being grinded. They're telling you to bear your cross, if you will, right? Suffer in silence. Don't you dare get out there and complain. If we tell you that it's Putin's fault, then dang on it's Putin's fault. Really? All so that you can keep your little contracts you got all up in Ukraine that benefits you and your family? I got to side with that? Are you kidding me? Moment, again, let that marinate for a moment. Clothing prices went negative, back into positive. Medical devices, medical care, commodity, whatever, they back up. Shelter, look at shelter costs. Transportation services, right? Still ripping. And these are numbers that, they could be skewed, they could be cooked, right? We understand the nature of what goes on here, right? We know there's an insidious nature. Man, y'all know what we're dealing with. I just say that. Y'all know what we're dealing with. I mean, massive things that are starting to rip. Look right, the cereal and bakery products index increased by 1.5% in May, after rising 1.1% in April. Another 1.5 on top of that. The index for what? Meats, poultry, fish, eggs rose 1.1% over the month, with the index for eggs rising as much as 5%. Eggs. That was brother yesterday, brother everything that came out when he put in the bad chat. It was not yesterday, the day before, excuse me. And he was like, look, guys, a dozen of eggs where he was at, wherever he was buying them at. I think, he might have been shopping at Whole Foods like I do, whatever. I don't know. $13 a dozen of eggs. $13 for a dozen of eggs. We know there's other things exacerbating that too, because you got the bird flu. You got all this stuff dealing with the chicken farmers right now. So the production of eggs have slowed. Again, even worse inside of an inflationary environment, because now that really makes it even worse. 5% increase on eggs alone. $13 a dozen, guys. That's basically $1 an egg. Think about that. That's almost $1 an egg. Imagine if you own that. Let that marinate for a moment. You got 4 kids at the house, right? That means it's going to cost you $1 per egg to scramble them eggs for what? Your family to eat breakfast in the morning. $4. Right? $1 per person for 1 egg. Way to think about it, huh? Let that marinate for a moment. $1 per egg. Bruh. Right? Bruh. Right? So again, once you know better, hey, look, you might have to come up with another alternative eggs, right? I don't eat eggs anyway. I stopped that a long time ago myself personally. That's just me though. That's just me. But yeah, you might need to come up with a different alternative for eggs right now, right? I did get me some chickpea flour, same thing and better, right? More minerals, more vitamins, everything. Less gas, less uric acid, less problems and complications. That's all that. Make your chickpea omelet, call it a day, right? Call it a day, right? Index for fruit and vegetables rose 0.6% in May after declining in April, right back up. Fruits and vegetables. Food at home index rose 11.9% over the last 12 months, the largest 12-month increase since the period ending since 1979. Today we're going to party like it's 1979. Bruh. Since 1979? Are you kidding me, guys? Like over 40-something years since we seen like the home index food value up this high. They told y'all that this stuff was peaking, though. That's what they told y'all. That's what they told. That's what they told y'all. They told you it was peaking. They told y'all it was peaking. Turns out it's not peaking, right? It is not. All 6 major grocery store food groups indexes increased over the span, with 5 of the 6 rising more than 10%, right? 5 of the top 6 in the food and grocery index value rose over 10%. With meats, poultry, fish, and eggs increasing the most, rising in totality around 14.2%. Eggs alone on the year is up 32%. Eggs alone for the year are up 32%. Yeah, it's coming down. Inflation, yeah, it's transitory. It's transitory. Them eggs, them clucks are transitory, right? Let me put an icon in the back chat, right? One time for the chicken, right? Just, one time for the chicken, right? One time they eat up all the chicken, right? Dave Chappelle, they ate up all the chicken. I don't know if y'all seen that new Cat Williams special, right? Cat Williams just came out a new special recently. Did by way of Las Vegas for Netflix. It was like, man, they talking about it was a shortage on chickens, right? It was a shortage on chickens, right? Or chicken wings, right? That's what he said. It was shortage on chicken wing, but there was a surplus of chicken thighs. He said, last time I checked, I ain't never seen a chicken born without what? Wings. If they come what? 2 legs, what? 2 legs and 2 what? 2 wings. Right? 2 thighs, 2 wings. Where all these wingless chickens at then? Right? You're like, that's the I'm about down left. Where all these wingless chickens at? Talking about there's a shortage on chicken wings, but they got a surplus of chicken thighs. Like, what? Bruh. Right? Couldn't make this stuff up, guys. I mean, absolutely just, I mean, ridiculous. So again, this is how you come juxtapose the lies, is my point. Right? I know we're making light of it a little bit, having a little fun. We get it. We understand this stuff is very serious out there, but you better you need to learn. You better know how to what? Interpret the data on your own, because they're never going to tell you the unequivocal truth. They're not going to do that. They're not going to do that. If you wait on them to tell you the truth, man, good luck. Good luck. If you wait on them to tell the truth, good luck. I mean, literally, Joe Biden was at the port of what? Los Angeles today, somewhere down in LA, and sat up there before everybody again and reinforced the same lie that he'd been saying for the past, 2-3 months on inflation and this, that, third. It's Putin fault, everybody fault except there. Hence, that's why his poll numbers are not only in the gutter, but below the gutter. When you hear the people say you need throw a joke in jail, throw away the key, or put him under the jail, he needs to go under the jail. Not in jail, but under the jail. The way he just keep lying. I mean, just literally just lying to people. Created more jobs than everybody. People went back to work. Not you ain't create not one new job. We create new jobs. They master liars. Got a master's in lying, PhD in lying, professor emeritus, right, of lying, right? Couldn't make this stuff up. Right? Food away from home rose 7.4%. You paying an extra 7.4% kicker from last year on eating out. It's starting to show. I can definitely attest to this one here. But much as we had, got DoorDash on speed dial around here, bruh. I literally saw some of my select restaurants I used to eat at when it was like dirt cheap during the pandemic. They were just struggling for business. Now, but them jokers that went up, man, look. Them prices went up. That's all. They didn't went up. It's crazy. Right. Full service meals rose 9% over the past 12 months. Limited meal value 7.3%. The index food and employee sites at schools fell from 30.5% over the last 12 months, reflecting widespread free lunch program. But that's good. At least they can help the kids out at school that can they have to worry about free lunch. At least that's the least they could do, right? But again, this one right here is the one though. This one here, right here. Well, all of this really, be honest, but the index increased 3.9% in May after falling 2.7% in May. This one here got everybody what? This one here was the one that made Wall Street catch a boomerang dagger in the back of the head. This the one right here. It fell 2.7%. Wall Street thought they had a handle on with the oil shocker. They thought, Biden was going to be able to lobby some broker some good oil deals with Venezuela and Iran and Iraq and all those places like that. And guess what? It didn't work out that way. Them people said, man, kick rocks, bro. Just literally, you was calling me your enemy. Today, you at my doorstep begging for what? Me to produce more barrels of oil to help out your nation. They told Biden to kick rocks, get off my land, matter of fact. Sent them back to D.C. with his tail tucked between his legs. True story. I'm not even being hyperbolic about that either. They literally told him to kick rocks. Just recently, they was able to kind of finally break into the door of Venezuela just a little bit. Maduro had to figure out, what it was really, what was really in for him before he really caved just a little bit. He didn't go a whole lot. He caved just a little bit though. Keep in mind, literally just a year or two ago, they were trying to pull a coup on him to overthrow him out of power in Venezuela and put in a puppet guy. The same way they did with Ukraine back in 2014, 2015. Same thing they're trying to do in Venezuela. Same thing these governments always do in NATO and America. Overthrow some other nation and put in a puppet government so they can feed off the commodities in the land and get contractors down to do the bidding of them. And it's stuff that, you know, look, man, all right. Nobody want to, you know, okay. Move on, brother African. Move on, brother. Don't be talking like that on here, brother. They're going to come get you. Yeah, whatever. Gasoline prices through the roof. Nat gas up 8% in May. Largest monthly increase since October 2005. See right there? Natural gas ain't never been ripping like this hard since, you know, going back as far as 2005. Absolutely crazy numbers. And they telling y'all that what? It's coming down, guys. It's abating. And the Feds done told y'all, but they're going to use everything in their power, in their tool belt to fight inflation. They not trying to fight not a stitch of inflation, not one iota of it. Because they too busy what? Pocket watching the stock market as opposed to what? Main Street's pockets. Main Street's paying. Main Street's grocery bills. Main Street gas bills. That's what they need to be pocket watching because that's what they're supposed to be doing the wheel of. They became such junkies of the stock market. Only thing they care about is what? Stocks. Every other conversation got to be about the stock market. Straight frauds and charlatans, guys. I mean, I don't know how to call it no other way. Yeah, it'd just be remiss to me to sit here and act as if, you know, this is natural when we know it's not. Again, they just completely just, you know, dumping on people. They dumping on people. Right? They're completely dumping on people. Right? And they want y'all to accept that this is normal. It's not. So again, once you know better, you do better. So that's the extent of your BLS site. Again, the numbers here are showing you, you know, in so many ways, again, that if you thought we was in the all clear just because they told you it was, right? Meaning the TV talking heads, right? Right? The TV celebrities, right? If you want to call them that. These TV celebrities told you that it was what? We're in the all clear. We're in the all clear. And I mean, literally, as soon as they told you it was in the all clear, they turned around and what? Oh, okay, well, maybe not. Well, upon further inspection, maybe not. But they knew that all along. They knew all along. Look at it. Alcohol even up 0.5%. Tobacco products up 0.9%, almost a full percentage point. Education costs 0.3%. That's a lot when you're talking about hundreds of thousands of dollars, of course. Personal care, 0.4%. Vehicle insurance up 0.5%, even costing more to even insure your little vehicle that's already what through the roof to even to buy the vehicle. Come make this stuff up. Recreation index values rose 0.4% in the month of May. This is a steady increase on these things, steady increasing, but it's abating, guys. Again, these smart people that's supposed to be reading this stuff, how do they keep getting all this stuff wrong? How do they keep getting all this stuff wrong? I'm just asking for a friend. I'm asking for a friend. How do they keep getting it wrong? And they supposed to be the what? The intelligent ones in the room. They're supposed to be smarter than you and I, but apparently we're smarter than them. Or is it that we're just what? Honest and learning how to read the data, and they don't want to tell the truth because they're too busy trying to what? Pocket watch the stock market to keep the stock markets up, to keep people excited about buying assets when they ain't even got money to put food and grocery on the table, right? Somebody help me to accept, that, that's good governance. I mean, again, peeing on you and telling you that is what? That is rain. They pee on you and tell you that is rain. Right? Couldn't make this stuff up. Right? The month of June was the month I was waiting on. Why? Because we know at this juncture, right? We on that what? Getting ready to go into the back nine, right? That back nine. If you playing 18 holes of golf, that back nine supposed to be what? Real challenging. Look, this one is going to get real in the field. If they didn't turn the curve on inflation by June, they know there was going to be up the creep out of powder. I can almost look. They knew it. We knew it. We knew this was going to be the month that to ether all the lies. And we got an FOMC next week that's going to be full of fireworks. Wall Street think they're in all clear. They are not. Right? They are not. It's June, guys. Y'all know this. June swoon. We in the building. Let's go.
If I'm being honest, loving you the hardest thing to do, so I keep to myself. I feel like I'm falling in and out of consciousness. Yeah. Now we starting to talk, let's killing all the progress. Really hard to process, you treat me like an object. Baby, we toxic, can we stay on topic? I feel like we lost it, feel like we lost it. Take my love, don't waste it. Even though I don't mind waiting. Latest, my mind racing. What else I have to do, girl, to praise me? I only want you, yeah. I only want you, I only want you. Pull me closer. I can't stop bleeding. If you gon' lead, then gon' lead just like everybody else. If you don't like my company, then I'll do life by myself. Girl, your love like a drug, it ain't good for my health. Even though it's killing me, girl, I love you to death. Take my love, don't waste it. Even though I don't mind waiting. Latest, my mind racing. What else I have to do, girl, to praise me? I only want you, yeah. I only want you, I only want you. Pull me closer, closer to you. Pull me closer, closer to you. Pull me closer, closer to you. Pull me closer. Don't push me away.
Calm down before you stress up the groove. The energy a little different when the blessings accrue. Hey, who you talking to? Just know I ain't no regular fool. Could be anything in the world, but I can never be you. Because I stand tall like I'm on my tiptoes. Baby, you think a little too small. I got big goals, baby. Hey, where the money at? Look, I just need the info. Pronto, I go and get it and split it with my kinfolk daily. And I'm the type of I might change my number on you. Yeah, that's how you react when people took a slumber on you. Pretty brown skin, baby, I can see the summer on you. You see all the bread, and I know it make you wonder, don't you, don't you, don't you? Ooh, I ain't surprised at all. Seen them rise and fall. Went up the mountain, it wasn't hard to climb at all. At the top, I found some relief. I finally got some peace. Carry on, but please don't mess up the mood. Yeah, I worked too hard for it. No, I need it, beat it, before you mess up the mood. Yeah, ooh, I worked too hard for it, and I need it, so please don't mess up the mood. Don't mess up the mood. Don't mess up the mood. Yeah, I worked too hard for Yeah, I could make a hit on whatever you pitching. Baby, let me fill up whatever you missing. Or you like it up at the top, it's a better view in it. I'm not surprised at all, no way. Hey, what you need? Come on, just pay the fee. I supply it all. Went up the mountain and it wasn't hard to climb at all. At the top, I found some relief, you see. So please don't mess up the mood. Yeah. I worked too hard for it. No, I need to beat it. Oh, you mess up the mood. Alright. Ooh, I worked too hard for it. And I need it. So please don't mess up the mood. Don't mess up the mood. Don't mess up the mood.
Okay.
Dick. Nice.
إذا this
Pay you by
I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get, I letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence, to let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes. Stay in your lane, how to stay on the go. I can play with the pros and act like a rookie, so they overlook me, then I double up again under their nose. None of them cold, they just got lucky but never adapted, so I'm to the one if it's coming to blows. My enemies cutting it close, I let them think that they got me, but what do you know? I had them beat before we ever spoke, I'm ready for smoke. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now they ain't go harder than me. They need a blade in a sheath, a shank in a piece, a crate full of heat, an army, a fleet, a tank and a jeep, a navy at sea with ace a marine, an ace up their sleeve, a team of marines, a freak on a leash, a beast with an appetite, razor for teeth, and still they will lay at my feet. Boy, you got the wrong one. I gotta look over all of my publishing statements for Q1 as soon as the song's done. I gotta call up my mama and tell her I made it as soon as my log's done. I gotta read all my trade publications and sip my tea till it is all done. I think it's all fun. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. I need to know everything, who and the what and the where, I need everything. Trust me, I hear what you're saying, but act like it's new what you're telling me. I'm curious, George, I hop in the Porsche, it's 5 and a horse, I'm ready for war, I'm coming for throats, to turn to a ghost, I need to know everything. Now you be surprised at the info you get is by letting them talk, so I'm letting them talk. Gotta keep quiet, maneuver in silence to let them in, chalk up their body, another one body, that's just how it go. I got some secrets, I'm shaking the game so they stay on their toes, stay in your lane.
All right, we'll do a run on the video, what they call the video segment, right? Oh, but Sean, somehow if it's not allowing me to add you in, you might have to go back out and come back in. Somehow it's saying that it's still your device is not connected, so there's no way I can press you into the room. Try to see if you can go out and come back in. I know that happens a lot, especially with StreamYard. StreamYard be on some other stuff, right? Yeah, so see if that'll work. We'll try that, right? So again, guys, we're up against, again, a mountain of, data and people acting like, yeah, there's no this, there's no that, there's no inflation, there's no this. Again, here's your market today, guys. Here's your market. Here is your market. Not only that, let's go back. Here was your what? Your what? Short-term peak that I was very adamant in saying, guys, 416. This is where you put on what? Hedge protection. We hit 416 about 7-8 times, couldn't break through it. It was almost obvious. I mean, some of the contract was so cheap going into the CPI print, which was a big binary event, that again, if you put on risk up there, I mean, I paid like pennies of dollars for a lot of the contracts I bought. Like I just say this, right? This one position. It's one position. I bought the 390s. Well, I closed out majority of the 400s and 398s, some of them yesterday, and I kept a couple of them on, well, one on. But I had turned them, I had others that I had bought as well. The 395s, and I had the 392s. Look at that. I bought those guys. I bought them when the market was up near 416. Them contracts cost me every bit about 20 cents, 23 cents a piece. Like, I think the ones that I bought in my TD account, I spent, y'all know me. I play that small piece of chain, right? Do a little some strain for small piece of chain. I spent like 112, 14 bucks for the 392s up in there 316. Only $14, $15 risk, and each one of those contracts paid out over $270 a piece from 20 cents. Those were just those contracts. 23 cents turned into 278. All the ones I had in Tastework, same thing. 40 bucks, 30 bucks for those contracts, plus one of them I think paid like 50 for one. One tranche in that regard towards the those the 398s. 398s were like 49, 50 cents a contract. Same thing, right? Y'all know I typically buy about 4 or 5 per lot value when I have these kind of news scenario. All of them paid out close to around about $480 a piece, somewhere around there, a contract. A piece. Again, that kind of level of risk where man, Those are just the SPY ones, not the ones even the ones in the Robinhood. Then I bought DocuSign puts in the earnings. That was another one, right? We bought those DocuSign puts. I bought Stitch Fix puts, right? The company Stitch Fix. Look, dime breed company. Y'all already know what's going on with that. Consumer discretionary online, consumer discretionary business that has what? Again, a niche market at that. A niche market. No brainer scenarios there. DocuSign, same scenario. Look here. COVID stocks, right? They call it what? Stay-at-home stocks. They call them stay-at-home stock. COVID stay-at-home stock. Ether in the earnings, right? Straight cleaned up on DocuSign. A lot of people like, man, this was a given. It still had, again, you had to kind of present the story. What was the reasoning behind, such a scenario where DocuSign cannot, continue to have that margin value or expansion that they was, loving so much during the pandemic, when their entire market hinges on what? On Europe and what? In America. They already had hit peak market in America. They had pretty much came out and said that under the last couple conference call, and they was hoping that the European market will bail them out. Did not happen. Did not happen. Europe is contracted more than America is. So how you depending on Europe to float your boat when they already struggling? They paying their inflation over there in Europe is so high. Look, bro, they can't even afford to have a baby. Right? You can't even afford to have kids over there right now. The inflation is so expensive. Easy. I mean, again, I say it's easy, but I really put as always, I put together my thesis. This is why I'm taking this trade. That trade up a nice bag, right? Nice bag today. Same thing, Stitch Fix, right? Like I had no losing trades today. Obviously, it was you like it pretty much sound like it. Everything hit, even the stuff that I put on 2 or 3 days ago, they hit. Everything hit today. They said hit different. It hit different when you right when you got your game on, your game face on. Clearly, right? Clearly, right? We were able to again find those indiscriminate places of weakness, right? And put on risk, and that's to kind of play into number one, the broader market sentiment, which we know that was going to be a kicker for today, because that's the kicker. The broader market is down on top of bad earnings. That exacerbates that earnings move, right? Y'all know how this stuff work, right? It's it's pile on, like y'all when my football players at old school pile on. When you can fall on the bottom of the pile, you're in trouble, boy. It come everybody now. And then the last dude to jump on the pile is what? It's the big boy, right? The big bruiser, right? Right? Little Benny come jump on the pile. He was about 300 plus pounds. He only like 12 years old. Like, God, dog, bro. Pile on. Look here. Stitch Fix. Make that make sense. Right? Stitch Fix, guys, this one here is very interesting. Stitch Fix was what? Was every bit around about what? $100 a day in a share. And then it went, went south. Right? It went south. God, dog, come on. Okay, here we go. It went south, right? Look here. Meteoric rise here. Stitch Fix was up here near $120 a share. Literally around beginning of 2021. Just straight pandemonium, as one would say. Just fugazi ripping since been ripping. Gave all the gains back and then some. Went under the value where it was even consolidating and hitting its low parts around $18 a share. Then after that, $10 a share, and now it's down to $6. Either somebody gonna have to buy Stitch Fix out, or it's going down to what they consider to be a real true penny stock. It is literally $1, right? And they say $1 and 30-some cents away from being a true penny stock. Right? Y'all know a penny stock is anything from $5 and below. It is $1 and change away from becoming a true penny stock after being over $120 a share literally a year ago. These were no-brainer puts, and they were dirt cheap. These puts right here were like dirty cheap. In the money, even the 750s, like I bought a ton of them 750s, right? Dirt cheap. Nice little bag there. Putting on proper risk. Again, the market is just, man, look, bruh. I'm playing the same inflationary marketed, Wall Street telling you that it's all gravy, baby. All right, I'll just take the antithetical try. I'll play the Jim Cramer approach, right? Y'all know everything. Jim Cramer talks about. Do the opposite, right? That's the whole rolling joke around Wall Street, right? He's such a bad read on the markets of late, right? Mr. Goldman Sachs himself, right? All of a sudden he act like he can't, read a chart or understand the fundamental analysis and all that goofiness because he just a constant perma bull, right? I mean, just couldn't make this stuff up, guys. It's almost comical, right? But the markets again are really telling you in so many ways that the party is about over, guys. At least for what they call this latest party, that was just put on. That's been going strong ever since about 13 plus years. Time to get a DJ a break, bro. Let the DJ get a day off, right? They've been spinning records since 2009. Like, give the DJ a break. Let the printer rest. Goodness, let the ink dry. These people have no chill. They're greedy. They a bad read on, again, true, a true read on the overall, duality of Main Street and Wall Street in totality. Even the government plays to that because they're more beholden to Wall Street than of the American people, the taxpayers, which is not, it's not hard to see that now. It's not hard to see that now. And so again, that's why we say this next midterm election going to be really a doozy. It's going to be a doozy, right? Right. It's going to be a doozy. Right. So the broader market again as a whole just really have shown out, right? They've shown out. Like, he's showing out, right? Yeah, they've shown out. They got all these people into this stuff, got them trapped, and then act like it ain't, this is normal. Yeah, po AMC still trying to hang on, boy. Po the AMC, po little tink, right? Po little tink. AMC just still trying to hold on for dear life. Again, found support at 10 for now, right? As they say, for now, right? Of course, I like them as a comeback story at a point when they could have really did something, but they turned it into such a minstrel show. It just really messed up the comeback story, if you ask me. Again, the meteoric rise was great. We granted, right? I understand, but that's not even the big one, right? Because we hit it way back when it first took off from $2, right? Actually, we put this trade on as a case to me and a few people, and y'all know, y'all was in the group. Some of y'all took that trade too. Me, Sister Kiana was the first, we kind of really orchestrated this because, she liked it, AMC. So we put on a trade. We went and looked at the debt restructuring. We looked at all the, the moving parts. What is it going to take to keep them from, for becoming insolvent? They had a lifeline list. We found that $2 was a nice support. And lo and behold, we put on leap puts at $3, in the leap, call buys for what I think like a year plus out. At a time when it was at the $2 mark, and it went from all the way from $2 all the way up to 20 the first ride, pulled back and went to 74 right after that. And no contracts were like 30, 40, 50 cents a piece. They end up paying out a piece, even when it made that run up into like $20 a share, that first run, they end up paying out like $1,900 a contract. Right? We cleaned the clock on AMC on that move. Right? 50 cents turned into basic 2,000, right? And of course, I had bought a couple of them, right? Well, I think I bought like 3 of them. I forgot how many she had bought, and yeah. But anyway, y'all get it. Them days, AMC, boy, look, it's not looking good for the apes. That's all I'm saying. It ain't looking good for the Planet of the Apes right now. That pattern right there, it says everything. Look, bruh. Out of gas. We're in the thick. Again, we got some big movies coming out this year too. Mind you, got big blockbusters coming out this year. You got the new Jurassic Park. We just had Maverick, Top Gun. Everybody waiting on Top Gun, like especially the old head. We just had Doctor Strange, Spider-Man. We got the new Avatar coming out this year. We got the new Black Panther coming out this year. I mean, this year is set. We got Black Adam. Right, with Dwayne Johnson, right? The Rock. A lot of big movies, but guess what? Man, AMC got so much debt, and they spending money on popcorn and all kind of goofy stuff as opposed to really fixing the business. Goofy stuff the CEO doing to appease these so-called what? Childlike investors that's telling them to spend the money on other stuff as opposed to what he know he need to be doing from a fiduciary responsibility. And every time the stock make a big run up, he sells shares. Dumping shares on them. Like, couldn't make this stuff up. Look, tragic. Right? No harm, no foul, guys. We have to keep it 100, right? We don't invest in pipe dreams. We're going to what? Be very good at, being good curators with what? With opportunity. So, yeah, the apes right now ain't, they're not feeling so apish, right? I would think, right? I would think, like they say, one would think, right? Because they jumped out the window under all this pretense of what? Is this or is that? It's like this. I'm like, bro, wait. Don't you dare jump out that window like that. Don't you let them people put that battery in your back and you get, jump on out there. So whatever. People got to learn sometime the hard way, unfortunately. Again, that's the game, right? They say that's the game, right? That's the game. Or, they say these are the breaks, right? Or whatever. Right? Same value there. So let's see. What else we got? Oh, Amazon. Let's hit Amazon real quick on the way out the door. Right? Amazon. Bro, they got the split though, but the split, bro, you got to buy Amazon. It's dirt cheap. Boy, you get a chance to get Amazon at $120 a share. I'm going to buy that, bro. Buy. I'm like, bro, no. You never buy a split all in within the first week or two of the split. Why? Because you got to filter through all the hype, all the mania, all the pumpers, all that. And then guess what? Even if the material value of the stock seems to be cheaper, it does not change the material value or the fundamental value that the stock might have been already overbought at the time before they even did the split, or that they have slowing growth coming down the pipeline, or the value that the PE needs to come down even more. So while you may think you're getting a discount because it was $2,100 a share and it's now down to what, $120 a share, you're not getting the discount. It was already overpriced at that point if they couldn't equate the margin value or revenue value or the EPS value to its current status in the market condition that can afford it at that point, meaning consumers who actually buy the products off of Amazon. All that stuff was not there. Ain't nowhere in the world I was finna go all in and buy Amazon at no $120 just because they did that split. I see, it come down to 100 under 100. I'm like Calvin Candy on the Django. Now you got my attention. Right now you got my attention. You get down under that 100, get down about 90, 80, 70ish, really be getting smooth. Boy, Amazon will get my attention because look, I'm still saying the broader market energy still denotes that we're not in the all clear. They lied and told everybody the bottom was in literally about a month or so ago. And they went to buying big money on tech when they made that other big run, when it went up towards 460, all that stuff like that. And they were just like, buying hand over fist. The bottom is in, all this stuff. How many people up there now trapped holding bags? A lot of people. They were buying Tesla over over 1,000 plus. Amazon over, 3,000, wherever at that time. Apple over 170, 180 at that time. You look at them stocks right now, where they at? Where they at, yo? Where they at right now? Let's go look at Apple. Hold up. Oh, I know, but look at Apple right now. They were buying well up here around the 170, 180. The bottom is in, bro. Right here. See right here? Back in March, the bottom is in, bro. They're buying way up here. Now to start down $137. Like, help me, baby. They say, help me, baby Jesus. Help me, baby. They're like, help me, baby Jesus. Bruh. And there we go. The market is closed, guys. The market is officially closed. We closed down on the S&P 500 today. Down on the day 2.9%, almost a whole 3%. And we're starting to show a little weakness even after hours here, going into into the after hour session here. So let's get over there real quick and look at that on the way out the door here. Again, thank you guys for being patient here today. We ask that you like the video, share the video if you find it to be very beneficial and helpful for you. I hope it has been, as I look to try to add value to your day. financially, right? It's kind of like a real time, I guess people say, a podcast and real time stock market scenario, whatever. Of course, we used to do this a lot at some point, especially in the pandemic. But things have changed since people back to work and doing stuff. So of course, timing is of the essence. But nonetheless, look where we closed down, guys. Look at it. We closed down weakness right here. See this bounce right here, where they were trying to protect that 390. Remember, I said 390 was that next point to break, and that was all about what? Protecting that whole dollar mark, right? We flushed. We got up here to around about 394, 395, and they flushed it on the back of the day. Trapped so many other bulls even up there. Hope they get a bump up Monday and bail them out. But this is what happens when you again can't accept what reality. This is again. It's just tragic. It's tragic. So soon when they start ripping up here, up in this 390, 394, bought me a couple of little swing puts. Now I can sell them within the next 14 minutes, because I got up to 4:15 to buy and sell any kind of SPY put, stuff like that, SPY calls, whatever. So yeah. Or I could swing them into next week. Right? The ones that I bought them, expired course Monday. They well in the money in that value. So that way you have some protection for us the delta. Now they would have to just really rip the market. They would have to just really rip the market Monday, right? But the way it's looking like right now, we can kind of break this 389. Matter of fact, let's go see when the last time we was at 389. Because then I could tell you exactly what would be great areas to look at. Okay, so there we go. There we go. There we go, yo. There we go, yo. Right here. Right. Last time we were, let's blow this up there. Blow that area up right there. So right here, guys, the last time we were at this point here, 389, was literally what? Well, that's essentially what that was last year. Last year, this time, right? May of last year, we was at around 389, somewhere around there. Let me see if I got this right, because I think that was not. Oh, it was this year. Why am I acting like it was last year? Right? That was just this year, because again, going back on the daily here, then you can see it more clearly. Excuse me. I was like, why am I thinking that last year? Right now, this is still 2022, right? Because we hit down, obviously we cleared 380. All right. But again, inside of this window here, where, again, being able to close below 390 would be very problematic for the SPY, because we have a run-on candle here, a wick here, right? Indecisive buyers there. We also have a nasty wick here. When we went down to 380 here, of course, we got some chatter here below it as well. So yeah, there's some areas of interest to kind of pay attention to at around those areas there, right? Clearly there, right? Clearly, right? So the market again is trying to do everything it can to close above the 350 range, or excuse me, the 390 range, and try to build a floor at that, at least a base there that they can work with. So as you can see, they had just that quick, it just bounced right back above 390. All right, that's some algos fighting to make sure that they don't allow anybody else a chance to make any other money here after hours. Again, these people just look, they're insidious with it, bro. They're gonna find a way to kind of kill any opportunity available, for any kind of sentiment to be changed from risk off. Right? They got to play in their mind protection, right? Protection mode. They got to get in protection mode, right? And that's dark pool. That's 100% dark pool. I can 100% guarantee that's dark pool, right? If I go to black box, I'm pretty sure that's a dark pool. That's dark pool buying that, right? Bought that under that 390 to try to keep the market from plunging lower, right? That's what they do. Of course, they say that's what they do. That's what they do, right? That's what they do, right? Again, they're a whole new different creature, and y'all know as well as I know, Wall Street hate taking L's, right? They hate taking L's, right? Look at that. Yep. After hour, look at dark pool buys already coming in after hours. Just like I said, over 200 million after hours, guys. 200 million. Dark pool. Another one just came in. 300 million. 300 million buy value, if you want to call it buy balance in the after hours here on the dark pool. $300 million already. Bounced the market off the 389.55 range, and they got the market all the way up to 20 moving average here and hit resistance around 390.70 something, right? 390.60 something. Trying to save the market from itself. right? The market don't need to be saved. Don't save it. It don't want to be saved, right? I'm sure I'll just real quick here. Then get ready to wind down here again. Thank y'all for being patient and tuning in, hanging out with your brothers today, right? Thank you guys for tuning in. Show y'all just real quick here. You guys got to see this here. Like, yeah, y'all got to see this here, right? You're like, yeah, y'all got to see this, right? Let me come over here, show y'all these dark pool buys, show you exactly how, these jokers up here were hustling. Because they hustling, bro. They are hustling. Let me see where we at. Hold on. Where's my Internet Explorer? All right. Let me do it this way. Forgive me, guys. 1 second here. So let's pull it up, and then let's go here. Share. Show y'all exactly what that looked like on the dark pool. Here we go. Right. Look here, guys. 4 o'clock hits. Not even into the close. Look right here. 4 o'clock hits. Y'all see this right here? $400 million worth. Get the market off the lows. Dark pool buys. Of course, they buy that higher value of price. In this case, if you see that as a way to kind of forcibly have a higher. It's like you buy it, you put it in and hope that wherever the person is trying to sell, you'll feel that their price offers a lot lower than that 401 value. But in this case right here, they bought these right at spot prices, right? These ones that just came in at 405 here and 407, they bought those at around spot price right here. They loading up. These are coming in right now, 109 million, $623 million buy right here. See right here, after hours, that's the one right there. It's just not coming in now. All right, it's lagging just a hot second here after hours. That's almost over $500 million right now to turn the market off the lows right here in the dark pool. Couldn't make this stuff up. Y'all see 109 million, 39 million. Look at them. Look at them. But these people here greedy, boy. They greedy. They greedy. Right? They're doing everything they can to save this little beloved Ponzi. I got to call it that for what it is at this point because, again, they're not, again, if it was every bit of a free market, it wouldn't be in the situation and shape it is right now because, again, they've proven that the Keynesian side of the marketplace is just very destructive. So where there's not organic growth, there's a hand of manipulation because that's basically what the Keynesian school of law is, right? It's the government control over over equity markets. Essentially what it is in layman terms. Before we go deep into, into the technical aspect of that. But that's essentially what's happening here. Even though they stopped the quantitative easing, right? But they still got an aggressive reverse repo operation market still going on right now. Matter of fact, I think somebody posted in the group the other day, all right? The tranche that they had set up to come out for today, $2.1 trillion for the reverse repo operation market. All that auction, that entire auction cleared, meaning $2.1 trillion worth of assets, in this case, bond for payments, were closed to go into today. The backstop, obviously, bond markets from crash and all this other stuff. It really didn't really help, but they try wherever they can. They try. But after all, they just dumping money out there, trying to turn the market. Or they could just be scalper right now. They trying to set the market up for next week. They trying. I say that they trying. Because they know this thing was getting ready to crater here. It's getting ready to, the bottom was getting ready to fall out when we start breaking down below 389, whatever. It was just from just from to be out of there. Right? You see it coming in? This stuff's still happening right now. It's still coming in. They still coming in now. Algos, all that stuff like that. Just couldn't make this stuff up. Right? Couldn't make this stuff up. Hold on, why is it? Oh, I forgot you got to stay on it because I'm not on Google Chrome. So yeah, so guys, this is this is y'all stock market. This is y'all stock market. This is y'all stock market. Oh, brother Sonny come in the room. Peace, power, profit, open sun in the building. Right? Can y'all see my screen still showing? Let me see if it's showing because again, I know.
Yeah, I see it. I see it.
StreamYard been tripping lately. Okay, good. So yeah, all them afternoon buys, right? Stuff coming on dark pool here. They trying to turn this thing boy after hours. 194 million, 97 million, 38 million. All dark pool buys. You bounced a whole dollar, right? A whole dollar. spend almost $1 billion to get the market off the lows of about $1. $1 billion and change, of course, in this case, because that one of them buys like ain't there $500 million in itself. Trying to save the little beloved market. This is just killing anybody trying to trade options after hours here to 615. That's basically what this is. This is market makers doing that. They coming in through the back door to spoof the market off that from dumping, because it was actually, as you see, it was just dumping. It was dumping into the the after hour session here. Then you had all of a sudden a magical doji appeared right here, right? This magical doji here, and then that turned it, right? Yeah, go figure, right? All right, so I may end up having swing one of my puts exposed to both, right? Right. Only one. Right. But that's it. So again, yeah, man, what a day, guys. What a day. What's going on, Open Sunday? How was your day, bro? I've been kind of going in for quite a little minute. I'm going to log off in a second anyway. But how was your day, bro? How was your day? Speak truth to power today. I know you had a good bang out day yourself. In terms,
no, I actually had a great day. I just didn't practice discipline, because I ended up total I came up with like 14 and some change, but then towards the end of the day I was trying to play with it and hoping that everybody was gonna cash out on DD before it distilled today. So I just bought like a few of them. I ended up losing like 125. I wasn't really tripping, but I was tripping because I should have disciplined myself.
Self-correction. Ain't never been wrong with understanding that, because as investors, you realizing that now that onus falls back on our ability to guard our books, right? Because you're trading your book, you trade those stocks, you're here for profit. Of course, in this case, as if in a trader's energy, it's definitely about being able to kind of protect what you make, right? They say you keep what you kill, right? And the goal from that point is to make sure that you put it away for a long winter if necessary too, right? And so again, that's a part of going through the regimen and figuring out, where's your balance, right? What's your threshold of what you're willing to offer back to the market after you've made money. Of course, if you put on risk in that regard, of what I'm saying, and then how to protect it, because that's in the same breath too. You make money, now it becomes a game of protecting it, right? And that again comes with understanding how to fine tune it. And of course, you're leaps and bounds ahead. You can clearly say where you were, let's say, a year ago, right? So as you go, you'll begin to kind of put those kind of stop gaps on your on your discipline, on your on the things that help you become more resolved and saying, you know what, I'm not going to play around this crazy market today. It's already nutty or whatever. I'm going to take my bag and sit on the sideline unless I see something that really looks good. Right? Because now it becomes a game of defense. After you clip the bag, now you got to protect the bag, right? Right. So
it was funny because my coworkers, they be tripping about how I be on the stock all day, right? And then so like in the morning yesterday, the guy asked me, he was like, "Oh, how much you made so far?" I was like, "Oh, like $7." But I had 3 contracts going, right, for like $10. And then so my goal was, it's usually the 20%, but I wasn't paying attention to it. And when I looked at it, I was up like $50 on all 3. So I sold 2 and kept 1. Yeah, so I sold 2 and kept 1. And then by the time I left it for today, by the time I woke up this morning and I ended up selling it, it was for like $400. So I took that and bought some more contracts, kept some money to the side, hit on that, and then I sold those. But then I started playing towards the end. I shouldn't have did it, but it's all right. I still came up.
A little lesson, a little tuition. We call it tuition over here. You pay a little tuition, right? Again, you're getting what they call OJT, on the job training, right? Even though you understand the parameters within you put on risk, and still in the moment where you're refining your skill set. And again, Buffett takes L, right? People take L, L here and there, but this ain't necessarily a real L. It's just that you gave back what you already worked hard to make, right? You gave a little bit back, right? As opposed to all of it, right? So again, no harm, no foul in that regard. Even though we want to be able to kind of take the whole bag up the table, and that's just a part of part of the game, right? That's
I'm
just
gonna
a
I'm gonna
part of.
tell you what sucks. I don't know if everybody else does it, but like I trade different on my IRA than I do on my individual account, right? And so the crazy part about it is I'm killing on the IRA, but on my individual, it's like I'm getting beat up all over the place.
Well, you know what that is? I can tell you what it is because I at some point early on in my career, I used to have this thing where it seemed like one account seemed to have more prestigious value than the other, or it would seem like if I make money in one account, so what if the other one only lags a little bit, right? So if I lose a little bit, at least I made money in this one. You'll have that same equal equitable value how you look at all your because it's still all your money, no matter what platform it's in, right? Even if it's different platforms. So being able to manage both, if you got trades in both going, meaning trades, not just investment, but trade, you have to have that same kind of equal value, in terms of how you value it, right? It's like, okay, well, this one here may not have much money as this one, so I'm just gonna focus on this one because this one got more money in it, right? Sometimes it be that kind of mentality a little bit, but it's equally just as important. So you got to make sure you when you put on that trade, and either one of those counts, or even the one that may be a little light, you still take the same approach. That is what is just as important. Or put on less risk in that one that has less value, so it don't seem as if whatever gains you may make in the bigger account, the loss that you got in the other one kind of wiped it out, right? It just canceled itself out like a zero-sum game, so to speak, right? But you'll get there. I'm sure you got what it takes to kind of keep building on what you're doing here.
Oh yeah, I've been working on it. My thing is just practicing discipline because I'm able to read the charts. I'm able to see or predict what's getting ready to happen. So it's on the page of once I make enough, or I see the trends, follow the trends. Like, don't play with your heart and be on the page of, okay, well, maybe it might not do this, or maybe, you know what I'm saying? If you see it doing what it's doing, follow what it's doing and keep going.
And that's it. That's the extent of what we're trying to do here. We're just trying to be consistent, right? And everything that we do, it's about being able to kind of level out the value of what? Consistency, right? So again, as you go and as you grow, again, you'll find ways to kind of move the right components, in play to equate to that value, because it becomes a game like we saw with Antarctica. It becomes a game of being indifferent, but also being very protective of. I don't care if it's $5, $2, 1,000, whatever. You have to become protective of. Why are you here? You're not here to test the market. You're here to make money, right? You're here to grow a portfolio if that's the case, right? Basically, essentially, make money, right? No matter what your window of duration is. If it's 3 months, 6 months, a year, 5, whatever, 10, whatever. The goal is to take from the market, not just, forcibly give them, $3 here, $10 here, 50 here, 100 here, C note here. No, it matters. It matters. And you'll see over time, you'll begin to, be more strict, right? With that, like you said, like, no, I'm not going to risk it. Let me take this bag, right? A bird in hand beat one in the bush, right? Exactly why we say that a lot, right? Because it does, right? Once you realize, again, the extent of why you really, truly here. And if it's somebody that's working with only $100, if they're able to grow that 100 into a rack or 1,000, imagine what that does to their confidence, right? Just imagine that, right? And that's where it starts. It starts from that kind of reality, right? As we say, a little something strange for a little piece of chain, wouldn't trade that for nothing, right? Because it can happen. A day like today was just that, right? I saw one of your posts. It was just that. You was up like what, 2,400%? Crazy. Now, crazy part about when you say that, when you think about it, you say, man, imagine if I had bought 6 to 10, 20 to 100 contracts at that value, right? Again, and if you made $300-$400 per contract and you had bought 100 contracts at that point, like, you do the math from there, right? It's that kind of energy. Like, man, so opportunity presents itself. It's up to us to capitalize, and it's also up for us to protect, what that looks like once we we hit pay dirt, right? Or we find the goose that laid the golden egg. Today is the harvest day. Let's go, right? right? So that's why we're here. So shout out to you, over, Sonny, for definitely, continuously in your journey, your growth, and you're getting better. And as we know, right, the lot size increases, the gains begin to increase in the same like this, right? The more you become more refined, more disciplined, and more posture to be able to handle it. All right. So that's it, guys. So yeah, so again, great day, guys. I'm sure everybody, enjoyed watching the fireworks and seeing what the market was going to do today with all this kind of CPI data, whatever. Again, mind you, we do know, going forward, again, when it comes to these kind of moments like this, these binary events, if you are of the mindset that you want to kind of, play into some of that volatility, again, as long as you understand the rules of engagement and you're comfortable with, putting on proper risk, manageable risk, if you will, I would say definitely, definitely play into it, right? Because the energy, once you understand that something like this kind of level of data that comes out is, revolutionary in itself because of, the implementation of what it, the seriousness of it, I should say, then yeah, these are great moments where you'll be able to kind of, really, really do well, especially on a 0-day expiration, if you got that kind of skill set, if you kind of ready for that. But just think about the market open up, and it still left what they call some meat on the bone for day traders to come in that may not got a chance to swing positions into today. Look right here. We were up here at 395, guys, at 930. We were up here right at the top of the VWAP resistance at the VWAP line. Here, this red line, the VWAP. We was right at the VWAP line in the resistance. And you got a flush even from there from an intraday trader perspective. And it happened in the first hour of the market. You went literally to, lows of the day. You went to the lows of the day on the first hour. Beyond that of here, we went a little lower, on the back end, but you hit, what was a great way to have the best run on the intrinsic value, especially when it comes to the auction market, in terms of the delta value. It was just phenomenal. You got a 5-point flush down in the first hour. 5 points. That right there was somebody's entire week worth of trade, somebody's entire month, somebody's entire year in that first, basically hour worth of trading, because we knew this was such, again, an event where we knew the market was going to respond to it one way or the other, up or down. And if you bought anywhere in the money at that aspect, at the level of resistance that the market was already kind of at coming into the opening here, and you got an instant gift from the market guys where you flushed down from 395 and change all the way down to 390 under the first hour. Right? They say right? Exciting, right? So again, little things like that, guys. Once you kind of feel like you turning that curve and learning how to assess risk, those doors are going to open up. They will open up. I'm almost certain you'll see exactly what's necessary that you need to do to be able to walk through those doors. Right? When you learn how to read that risk, assess it, and then trade it. The same way we had a pump, on the back end of the day to try to level out some of that risk at 390 support that they was protecting that 390 area. And you got right back up towards 394 and then failed in the last 30 minutes into that value inside of 3 o'clock. You had literally a 4-point flush down, 4+ point flush down in less than 30 minutes. Those kind of scenarios, like, man, that's crazy gains. All those were contracts that were probably bought for Monday, and you was able to close out, on that last 30-minute swing to the downside. And people just making money hand over fist like that, hand over fist. Right? It's exciting, right? What else can you say? It's exciting, right? But anyway, we live for this stuff. We love it, right? We love it, and we want more of it. So again, discipline above all things, due diligence, and discipline equals to dollars. That's what we're here for.
Hey, Oba, was you able?
Go ahead.
Was you able to? Was you able to tap in on what's going on with China and how that affects the market too, or how it's been affecting the market?
As far as what with China?
As far as them acting like they was going to open up. Well, they was gonna they semi what they call opened up, but at the same time they were acting like that they were going to allow the stocks to open up too. So then they had a change on what they were going to do, where they basically were going to put more leniency on the tech stocks, and so I mean not leniency, they were going to go more harder on the tech stock.
Well, the whole
So
regulation thing,
yeah,
just
yeah.
add to that, and again, well, in terms of the exchange rate, the Hong Kong exchange in itself, right? The ADRs that we already have on our exchange beyond the SEC regulation aspect of that, but this whole issue behind the company Didi, right? They kind of absolved them of any kind of potential wrongdoing as of today. All of a sudden, well, not today, but when the news came out, about 3 days ago, somewhere around 3-4 days ago. But that also caused a massive rally in what all the other overlying ones, right? I'm not say underline because people like Baba and JD and Pinduoduo, all them ripped. Go ahead.
I was gonna say Didi. With Didi, they had came out today, and well, not today. Yesterday, my bad. They came out yesterday, saying that they were going to distill. The reason why they were going to distill is because the Chinese government basically put sanctions on their. I mean, well, yeah, you could call it that. Sanctions on their customers, to where if they still were part of the New York Stock Exchange, if they didn't distill, then they was going to put the sanctions on their customers.
You said distill, but you mean delist.
Yeah,
delist.
Yeah,
good. Yeah. So yeah, that's the whole issue around what we already saw for that climate of transparency dealing with the SEC, all of the data, the Chinese finance ministry in terms of how they go through their level of reporting or the extent of their level of so-called transparency based upon our system. And it's just a soft slap that they slap at each other back and forth with white gloves because we're still in the middle of a tariff war with them. And this is just them, again, picking fights indiscriminately in ways where they have big enough robust exchange, even in the Hong Kong exchange in itself, where these stocks can still do pretty well, right? So it's just a whole lot of grandstanding. And mind you, of course, we love trading a lot of these ADRs and just Asian stocks because they offer, you think about Alibaba, Chinese Amazon, you want to call that. Actually, I think they're a little bigger because they cater to that whole of Europe market, Asia and Africa, Australia, etc. Pacific Islanders, they cater a lot to those customers even more than Amazon would do just, in the States alone. But nonetheless, we saw that stock, again, just really fell from grace. Just talking about Alibaba from, 400 plus all the way down to where it's at, right? JD, right? Solid company in itself. Again, many others, we can go down the list. But anyway, Didi was supposed to be that unicorn, right? It was all excitement and hype about it when they IPO'd. Turns out there's all kind of financial issues. Here's the books. Here's the issue with the Chinese regulation. Here's the issue with SEC now fighting against Chinese stocks. So you had a double whammy on top of Didi, right? Couldn't catch a break. And so now it's like, management looks at this and say, I was looking to utilize the American investors to really help give us a leg up and we get that exposure. Now, why even go through the headache? All right, let's just go on, just if we need to, let's go list on the Hong Kong exchange. We got our name out there. If the European or the American investors still like, our business model, they can come and invest on our, in our company by way of the Hong Kong exchange. Cause you can buy shares through the Hong Kong exchange. You got to call up your broker and buy, get them to parlay that trade for you by the way of the their operation value, so to speak, right? So again, if they do delist, if it goes, matter of fact, if you even take it off the big exchange like a NASDAQ, I think it's a NASDAQ stock. If they even put on the pink sheets, right? OTC market, right? Because that's this whole idea of them going to the pink sheets. All right, Luckin Coffee actually did it. I remember when Luckin Coffee was doing it. And Luckin Coffee was one of the stocks that we traded a lot, man. That thing was just used to rip, right? This Chinese Starbucks, right? And they actually end up delisting because they actually had bad management. They were cooking the books. They got caught cooking the book. And by the tune, I think over 350 million, they got caught red-handed. And so, SEC them was like, no, not on our watch. Like, you out of here, bro. And they took them out, right? They took them off. They went out to the pink sheets. Compete sheets like, we'll take you. Right, because they had ample liquidity, more than necessary, and people still like the stock because they thought the growth stock was in play. and they went on right over there, on the pink sheets. I think it opened up on the pink sheets around what? Gosh, I want to say it was like what, $2-3 if that, somewhere under that, and it ended up going from there all the way up over what, $14-15 a share, almost a short order time frame. I mean, they were buying Luckin Coffee up like crazy on the pink sheets. And again, everything about the OTC market picked them up because they had what? It had a lot of liquidity. A lot of Asian investors and American investors were buying Luckin because they liked it, to be symbolic to that of what? Starbucks. So if DD goes that route, it'll probably have that same energy because DD is kind of like what? The Chinese what? Uber, right? Or the ideal of, I guess, what that looks like, right? I guess you want to say that, right? This ride sharing scenario that that they offer. And it's very useful, of course, and you think about the Asian market because they fighting pollution and smog, so they trying to cut down on all that stuff. But anyway, yeah. So
if you if you get delisted, can you come back or no?
Yep, you sure can. You just got to meet that threshold of what they require because you have to meet a certain level, requirement. It's a liquidity value. It's a notion of value in terms of your share structure, all those kind of things, right? You meet that criteria, you come right on back, right? I mean, granted, we won't have any kind of bigger issue like a SEC, or in this case, it would be the FCC, right? Just having the issue with all that kind of stuff like that as well, as far as the tandem of both, I guess, of dealing with these Chinese stocks on our exchanges, right? This whole Cold War feud that we got going on with them, right? This whole slap hand stuff, right? One, both of them somewhat need each other, but they acting like they don't. It's that kind of energy, whatever, right? Lying, you make your bed, you lie in it, right? They got so much business, entrenched into the Chinese, people's, backyard that, hey, this is the reality of that, right? So yeah, we'll see, but it'll be interesting seeing, how that plays out. But the stock definitely has value. It's up for, the bigger, fish to kind of figure out what that is, what that looks like. Unless you have an AMC kind of, moment in DD, but for the most part, I still think, it's like everybody else. It's under a lot of fire because broader markets globally are under fire, depending on what your industry sector is. It'll work itself out at some point, right? So it'll be, but that's one, if you want to mirror it up against another company, go look up Luckin Coffee, right? That'll be a great case study. If you want, if you like DD for whatever reason, look up Luckin Coffee. You'll see exactly what they went through when they left our exchange, went to the pink sheets, worked hard, and got the stock price back up, and all this. It just, it was just a mess, right? It was just a hot mess, right? Look at the algos right now. Somebody just cleared out a big order, right, in the market, just like that. It's funny when you see that stuff happen like that. But that's it, guys. So I enjoyed it, man. This was a great session, man. Again, good little moment to kind of get in and, put in some quality work. As y'all know, I like to say, man, let's figure out what these numbers look like, right? Let's understand the data, right? Let's get comfortable being nerds at this stuff, right? CPI, 8.6 inflationary increase readout today, a 1% kicker additive 1 month over month. There is no abating in the ideal of inflation, no time soon, even though they try to push the agenda or the propaganda that it was. They got people excited about investing in the stock market. Well over, as I say, well over, $430, $440, $450 a share again. Some of these stocks are, well above, 14, 15% from where they have dropped from since then. It's just a tragic, how they keep baiting in all these retail investors, right? Because a lot of these guys just don't know how to read the tea leaves. Hence, that's why we spend a lot of time trying to read the tea leaves and learn this stuff, because it's better to know everything that you possibly can as opposed to going in there trusting, again, a person like this right here. I got to show you this on the way out the door here. This guy right here, man. This right here make no sense, right? This right here. I say, did you hear right here? Did you hear right here? Y'all see the time right there? This guy, right? These type of guys, right? Like give it a rest, bro. Right? Give it a rest, bro. Market's frantically trying to bottom. But he said he called a bottom when it bounced last time off of 410 and went back up to 4.6. They said the bottom was in then. Him, Tom Lee, Tony Dwyer, many of those guys like the bottom was in. He was telling people to buy Apple up what, above 460, all that stuff like that, Facebook, all that stuff. And now he changed the tune again. Oh, frankly, trying to bottom. So for the first time in the ages, we are doing some buying for the CNBC investment club. Like, bro, give it a rest. And see right here, people already know, that he just 100% what TV personality fraud at this point. Lower we go, right? They know everything that he said to do, you do the opposite, right? That's the rolling joke around Wall Street. Seriously, right? See right? Trying to bottom, right? Trying to bottom. What's trying to bottom? That's like what? The Fed tomorrow, we're going to have what? Somewhat of a what? We're trying to engineer a soft landing. Soft landing. You have a hard landing or you're still crashing, right? One way to, it's crazy. But like, Jim, I don't understand what you're looking at the rest of what? And the rest of Wall Street basically isn't, right? I guess that 60 to 70% of the firms are forecasting a recession. Today's CPI was insane. Stocks are not near bottom at all. Easily another 10% down from here. Then let's talk about the bottom. They've been trying to call the bottom so much, and they've just been wrong. They've been wrong. They've been wrong. And they've been wrong. And people have been buying and been buying and been buying these companies, what? These institutions, these hedge funds, these money managers, their bags. Because they have no discipline. They don't understand how to read this stuff in a way where they don't need to, don't understand the value of what? Assessing risk. How to go look at the real data themselves, primary source to see whether or not, everything that they're saying checks out, right? Back testing the what? The fundamentals. The same way you back test a technical, you got to learn how to back test fundamentals too. True story. Right? True story. So this is important to realize this stuff. Again, he just throwing out just all kind of stuff. Ain't nowhere near no bottom that he called back, when the market was up near what? 430, 440, 450 area, and then talking about the bottom was in. Right? Could make this stuff up. Like people here like, bro, don't you say that what? It's time to buy, because people gonna start what? Selling out. They do everything the opposite of what Jim Cramer do. Right? It's okay to admit that you're wrong every now and then. This will increase your what? Credibility, not the other way around, right? Joker's like, no, these people just whatever. Hey, brother Ray, like, bro, Jim, please delete this. Like, delete this, bro. Right? You're gonna fall on that sword, Jim Cramer, if you leave this post up. Because you've been wrong so much. Him and Kathy Woods just been getting crushed over the past year and a half. They've been getting crushed. You talking about two bad reads in the market right now? Jim Cramer and Kathy Woods. I think they bat at least negative 10 far as they win ratio, right? With occasional 1 or 2 wins there. Everything else though, horrible. Right? So again, that's what I'm talking about, guys. Be careful where you go get your get your information from. Don't let TV personalities, none of these people give you data unless you can back test it, fact check it, etc., etc. That's what I love about this industry, because we have just as much power to do just that ourselves. We don't have to depend on them and them alone. See how that works? We don't have to depend on them, right? That's important, guys. It's important. Because these guys some A-list level, bad acts, I guess. There's some real bad acts. If they was on Broad Street, boy, they wouldn't last long. Right? They would not last long. Complete bad acts. That lumber dropped another 2% today. It's starting to look like it's trying to find the bottom though. We'll see. He's looking at some of these data here on Bloomberg. But that's it, guys. I don't have anything else, guys. I appreciate you guys. All right, this was a good little moment here again to kind of kind of go through the numbers, like as we say here. Again, CPI, some call it the CP lie, right? Again, it's important to learn how to read these things, because this is public information. Everything that I put out today was public information that you can go find. You can go parse the straws and see what's what. If you need help understanding that stuff, that's why we're here as well. We got groups, chat rooms, discords, you name it. Hit us up. We're more than welcome to help you out. That's what we do here, right? We understand that it's a band of brothers and sisters. We all here for the same purpose and same reason, right? And if you want it on a more personal level, of course, we do offer one-on-one sessions as well. Hit me up. We help you even with that, right? So no harm, no foul. Either way, we're all in this together, as we say, Ubuntu, right? Because it does matter. You need your eco. You need your a clan, or at least environment where you can go hang out you know, and allow that collective value to help you get parse draws and get, you know, get this information down. So there you go. June numbers here for the CPI, because we got that and we got, you know, PPI all in one day. We just overshadowed even that one. It was so crazy, right? But there you go, 8.6%, 8.6%, right? 8.6%. I'm just saying, where is inflation coming down? Where is it coming down at, right? Where? Or right back up. National average of where I'm at, what, $4.50 a gallon? National average, the national average at 4.5. So that means states where there's what, high cost of living, places like California, they're paying $10 a gallon right now. $10 a gallon. Imagine that, $10 a gallon. That means you could take a gallon jug, an old gallon jug of milk to the gas pump, and that gallon gonna cost you $10 to fill up that milk, that old milk jug. $10. You might put a gallon worth of gas in it, take it back in the house, and put up on your mantle or your fireplace. Say right here, this right here, more expensive than gold. Right? Yeah, you got gas in the house as a what? Decoration. Like, bro, what that is? But that's decoration. About $10 a gallon for that, but $10 a gallon. But that's some good sweet crew right there. Couldn't make this stuff up, guys. It is that crazy out there. Anyway, that's it, guys. So enjoy the moment here. Enjoy hanging out with you guys here. If you have any questions, again, hit us up. Don't forget to comment down below, like, share, subscribe. You know, again, be a part of the community wherever you see that we're hanging out. You know, come hang out with us, right? Come build with us as well, right? We appreciate everybody. All right. So that's it, guys. See y'all on the next one, and we'll close out the same way we came in, right? It's June, right? It's June swoon. Hold up. Now, what's one I ain't played in a while? We just played June swoon. Let's go back to what we did clutching. We haven't done clutching in a while. It's clutch time, because guess what? A lot of us were clutch today, right? We knew it was coming though. We weren't like we were clutch, but we knew it was coming. So you know, a lot of you guys cleaned up the closet today. Y'all made some good money, right? I got a lot of good little messages and email from some of the people that would just made some good money today, right? I was like, I'm loving it, right? And a lot of us, you know, man, I think the one guy. We had, it's even some of the guys over in Black Bubble, but one personally dude I know, he definitely was up there near that top level, close to near 6 figures today, right? We were talking about well up in there that 70, 80,000 range today, right? And I'm like, let's go, right? Let's go, right? So stuff like that just makes me get excited. So that's what I'm talking about. When you just clutch, when you know what to do, when it's time to make that move, it's time to go. It's time to go, right? Let's go.
The bar raising, we keep moving it up. Ain't no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. I got faith restored, why you pushing the brakes? I ain't full of myself, boy, I'm full of mistakes. I came from humble and roots, I'm here to stand and deliver. Had no one gassing me up, except the man in the mirror. I used to work on my handles, and now it's handles of liquor. I write these songs in a dark room, the candle will flicker. I stay practicing heavy, for when the game's on the line. It's like over and over, I run the plays in my mind. I'm a psycho, I'm taking my time. Rushing perfection is a dangerous crime. You gotta give it and take it. That's what you do till you make it. I had to roll with the punches and take the hits from the flagrants. I'm saying the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much, but I always came through in the clutch. An off game don't mean I'm losing my touch. And no excuses, I ain't using a crutch. Apologies if I was doing too much, but I always came through in the clutch. I was falling, had me stalling. I was way down, now I'm balling. I done came up, and I called it. I done came in the clutch with the game on the line, I know. I operate from a higher place. Wait, some decisions don't try a race. I'm doing what I can to fuel the flame like a fireplace. To make a bunch of money, buy my mama a fireplace. We make incredible songs to celebrate and get mad lit. Once upon a time in Hollywood, I'm like Brad Pitt. My homies say I live a life, yeah, just a tad bit. Learning how to move in this rap shit. I told them that the bar raising, we keep moving it up. And no surprises here, they knew it was us. Apologies if I was doing too much,
Everything is twofold. What's joy is pain on the other hand. And what happens when the one that you love is the main cause of your suffering? I need you like I need air to breathe. I need you to save me from me. I'm caught in your wave, I'm drifting away. I need you to save me. Please don't let me drown. 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 Whoa. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, but the walls keep closing in, and I don't wanna die, but your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. Like I'm drowning with all of this darkness surrounding. You need me like you need air to breathe. You want me to save you from me. I know that you're trapped inside this wave. Who's gonna save you? Who's gonna save you from me? I can't see you drown. I can't see you drown. I can't see you I can't breathe, I need to get some air, but it's a toxic addiction. You're a guilty eviction. You can't breathe and you just need some air. Give me all of your lies, 'cause you're my demon in disguise. I learned to love the cage you keep me in, where the walls keep closing in, and I don't wanna die, but your poison feels so right. Why do I want you when you're bad for me? My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe. My perfect storm, my beautiful catastrophe.
All right, guys, that's it, guys. Thank you for tuning in. Peace, power, and profit. We'll see you guys on the next one. Peace, everybody. Peace.